Good morning. I call to order the regular board meeting and retreat, February the 10th, 2026. Shortly after 8:30. Roll call. Mr. Mark Anderson,
Here.
Mr. Harry Block,
Here.
Mr. Bruce Mandrek,
Here.
Mr. Jack Turner,
Present.
and Willie Campbell, present. All board members present accounted for. Welcome, everyone. Welcome. Welcome to our board retreat and our meeting. I know we are in for a full day of information and good stuff coming our way. Welcome, Cabinet, our administrative assistant, our superintendent, and our guests. We're so glad to see everyone. So with that, do we have any public comments for today?
We have no public comment.
No public comments for today. So with that, we shall get started and we will give over to our superintendent for his information update, superintendent's update.
All right.
Here we go.
Thank you, Madam President, members of the board. Good morning.
Good morning.
I first of all would like to just welcome you to American River College, which is where we're hosting our meeting today. I would like to publicly give a word of affirmation and appreciation to Dr. Lisa Cardoza, who is the president here at ARC, for graciously opening their facility for us to use this space for today. We have a very, I think, packed day, really talking a lot about our budget and finances. And so that's really the heart of today's discussions, as well as looking at our mid-year LCAP update and legislative and legal updates. So staff has prepared a really good day for all of us, and we look forward to the work that we have ahead. So with that being said, we're going to move into our first item, which will be our Wells Fargo investment account report out. Today we're happy. Mark, do you want to introduce him as our board treasurer? I got ready to say it, but
Kelly and Tyler are here to talk about our Wells Fargo portfolio. Welcome both of you.
thank you.
Thank you.
Lift to the right.
Sure.
Well, good morning, everyone. Thanks for having us. Again, my name is Kelly Huff. I'm the relationship manager on the Gateway CC investment portfolio. And this is Tyler Flanagan, the portfolio manager who does the day-to-day management of the portfolio. We've been allotted about 20 minutes, and so we will stay on time. And I'm going to talk briefly about our IPS process. Tyler's going to hit the economic commentary, look at performance numbers from last year, and then we'll answer any questions afterward. One of the questions that came up when we were on pre-call was how we decide how much risk to take in our portfolio. It's obviously a really good question. And that really all goes back to our own internal investment policy statements. It's a document we generate that two officers at the Gateway have to sign every 2 to 3 years. And it really gives us our roadmap and marching orders for how much risk we are allowed to take. Tyler's not allowed to go off the ranch and do dramatically more risk, without new signatures in a conversation with you guys prior to doing that. So he does have some wiggle room to tinker a little bit within some of the ranges, but as far as the overall risk level, it remains based on that signed IPS. One of the things Tyler and I have been talking about is, as the portfolio Gateway has grown so much, a couple of things for you guys to maybe consider is at some point developing your own internal investment policy statement. We could certainly help facilitate that conversation, provide samples. Really, it helps you guys get in writing the objective, the goal. And if you go back historically, when this account was first opened, it was really a capital preservation account, very, very low risk. And over time with education, and you guys really haven't pulled any money out of it. meaning it's a long-term portfolio. We've been able to make it more balanced versus just sort of all in cash and short-term bonds. So we'd be happy to have that conversation with you guys whenever, if it's something you're interested in, and then take that one step further, you might consider an investment committee or a finance committee, a subcommittee, just to kind of work on some of the details of that. I could talk about IPSs for 20 minutes up here, but that's not today's main focus. I just wanted to briefly address it. And any questions on investment policy statement? Right, Tyler, I'll turn it over to you.
Okay, we'll step into the economic update. We'll go through this briefly and then we'll touch on the portfolio itself. So really, the economic update, there's kind of three key things that we'll touch on here. Broader economics as far as what we expect from a global kind of macro view, as well as just some touch points on kind of what we see kind of happening here in California a little bit as well. Beyond that, we'll touch also on the future forecast that we have for interest rate expectations and as well the markets themselves, the end of year forecast on that end of it. When we look at our current forecast on the broader economic perspective, it's really a pretty rosy picture. We're expecting GDP to really normalize through this year, maybe one quarter here in the beginning, to have a little bit of a hangover from the government shutdown happening, kind of slowdown that might have happened in that time frame, but really to normalize by the end of this year, as well as inflation staying relatively stable at the current levels too. And the reason why that's pretty important from the inflationary perspective is that would probably be the biggest risk to the current narrative on the markets. If we did have a reflation event, it would put into question the current policy from the Federal Reserve. And so those are things that we're watching closely on that end of it. That said too, we do have a number for the end of 2026 where unemployment is rising slightly from where we are toward the end of toward the December number. 4.9 though is still full employment. So it's not something where we're expecting the economic cycle to go through any type of recessionary event. It's really just a normalization within the employment cycle itself. This is coming off of 2 or 3 years where we were really almost calling for a recession, and it not really coming to fruition as well. So in prior meetings, those were some of the expectations that we were really honing in on. And employment typically lags from that perspective too. So typically you see unemployment rise after a recessionary event. So companies usually let go of their employees when going through their hard times last. So it's something that it's really kind of a lagging indicator from that perspective. That said, again, 2026 forecast really pretty optimistic from a growth and unemployment and inflation perspective. We do have some on the following page. We do have some kind of headwind tailwinds to go through. I'm not going to go through these individually one by one, but I will touch on some key parts to this. Again, all eyes are still on the Federal Reserve and what's happening there. We will see a new Federal Reserve chairman this year as well, so that will bring in some volatility from that perspective. But we really aren't expecting interest rates to be volatile this year as compared to previous years. So that is a silver lining from the bond market perspective. The other side of that too is obviously there is some geopolitical considerations to have to keep an eye on right now. There's a lot happening in the world as far as from conflicts perspective that have been happening for the better part of 2 years now at this point, and or if you're looking at other areas as well. So those things are all things that could cause disruption to supply chain. Those things could all be reflationary events as well. But at this point in time, we don't see the prospect of them escalating and impacting supply chains at this point in time. But again, those are all kind of things that we're keeping an eye on. The big driver from the market's perspective at this point in time is by far and large the artificial intelligence. We'll call it a boom at this point in time. It is a massive investment into infrastructure, a massive investment into technology that we're seeing happening rapidly. The silver lining to that is it is coming on the backs of the most profitable companies in the world from this perspective. They are spending their free cash flow, not using a debt burden from that perspective, like you saw a lot in the dot-com era. So this does have legs, if they continue to spend at this rate, and that spending doesn't change. That would be the catalyst, is the spending change. That's where you could really see, kind of the narrative change, come down a little bit as far as expectations wise. I'm gonna pause there, because there's a lot to this page, and, some of y'all have read it as well. Any questions on this economic, kind of update right here before we go to the future forecast?
Any questions?
Okay. Next page has our market outlook. Again, when we originally came out with these numbers, and these are now going to be forecasted up probably here shortly as well. This was all the way back in September when we came out with these numbers. 7,400 to 7,600 for the S&P 500, which doesn't seem like a lot higher from where we are today, almost at 7,000. However, when we originally came out with this, we were almost 10% higher than our original forecast for the end of 2025. So we are expecting a pretty rosy picture. Average market returns for the S&P 500 on a 30, 50, 80 year basis is around 9.5% to 10%, depending on the day. So you're really looking at a really kind of above market expectation through the end of this year. The other really interesting thing that I've continued to point out to people is where the fixed income market is going to end up, hopefully by the end of this year as well. You're looking at inflation popped around 2.7, 2.8% is what we're forecasting, and a yield curve that has cash at 3 to 3.25, which is a actual neutral position for cash. A textbook Finance 101, exactly where you expect cash to be in a normal economic environment, and then a rising yield curve from there. So we're really expecting the economy by the end of this year to be in what you would call a mid-market cycle, coming out of the trough, heading toward a peak, and really have interest rates in a neutral position. And this would be what you would call a normal yield curve, which we have not had in over 20 years. So it's kind of a rosy picture from that perspective too. But all those things kind of shaping up, what it really allows the Federal Reserve to do is be in a position to pivot to whatever comes its way. And from a monetary perspective, I don't think we could be in a better position because of that. So asset class performance as of last year, starting to look in the past. We did see the emerging markets and developed markets heavily outperform last year. This is why we maintain diversified portfolios to make sure we're capturing this. The majority of this return was on the back of the dollar weakening. As you lower interest rates, you bring down the value of a currency. And we lowered interest rates from 5.5 all the way down to 3.5, essentially over the past year and a half or 2 years. So you've seen that kind of draw out into a weakening in the dollar finally toward the middle and beginning of last year. And that in turn propped up outside markets from a global perspective. We are expecting this to continue to a degree, but not as much, considering that we're only looking at a few interest rate decreases that were baked in last year and possibly just 1 or 2 more this year. So the expectation would be that that would be normalized through the end of this year. Any questions on asset performance? Okay. I'm gonna skip through the next couple pages relatively quickly. Really, when we came out with these targets originally, we were pretty much ahead of consensus. And in other words, we really had a pretty optimistic view in relationship to the rest of Wall Street. Everybody else is kind of caught up to that now. So now we're actually a little bit conservative, but we are likely updating our end of year numbers as well. Again, though, key points is all eyes on the Federal Reserve, what's happening with inflation, all eyes on the geopolitical theater, and understanding where the risk might lie there. And then just keeping tabs as far as on what the hyperscalers or the large mega cap companies are doing from a spending perspective. And if that narrative is going to continue at the same pace. Okay. That's the economic update. We're going to jump into performance. So when we look at performance, we kind of always measured it versus inflation across your portfolio. Originally, the portfolio was much more conservative, so it had a much lower inflation target. But now, as the portfolio has become slightly more aggressive, we do have a higher target for the inflation, CPI plus inflation, just in general. So right now, what we're targeting is CPI plus 3%. And the significance of that is you're really looking at, okay, how do we make sure that the money that we're investing is keeping up with inflation, number one, and then outpacing it from a spending perspective if necessary. And that CPI plus 3% really gets you to about a 6% number traditionally. And that's really kind of where we want the portfolio to be above over the long term. So when we look at the portfolio, obviously since inception, much more conservative to begin with. So the returns are hanging right around 4.88% net of fees. But if you look at the last 3 years, this is when we changed the investment objective to be a little bit more aggressive coming out of COVID. When we had the conversation at that point in time, interest rates were at 0. So there was very little argument to continuing to just maintain a heavier position into bonds. That narrative is changing as we talk today because interest rates are higher now. So we'll continue to rotate back into bonds a little bit, reposition the portfolio to be a little bit more conservative. We have captured a good amount of this upside, so it is favorable from that perspective as well. I'm going to pause because there's a lot of information on this page. Any questions on this first page? The equity returns are on the page, so I will cover those as well. Okay, following page, we have the equity returns. Again, this has been the biggest thing that's changed, just the percentage that we have in equities. We're now sitting around 55% in equities. Last 12 months, again, very strong within the markets, mainly bolstered by international markets. We are more conservative in the international markets, just in the portfolio in general over the last year. So we didn't take as much advantage of that position. But going forward, again, our call is still to stay more domestic focused at this point in time. And when we look at the 3-year number, staying more domestically focused has definitely been a good call from that side. Again, keeping closer to the S&P 500 within those return objectives. Real assets, we do have gold in the portfolio. It has performed very, very well. At some point, we do need to sell some of the gold within the portfolio. It does go through a big boom bust cycle. We do see that though as a position that could continue to run up for a period of time at this point in time, just purely because a lot of the buying has been institutional buying. And so the expectation that more what's the word I'm trying to think of? Retail purchasing will come into play.
That's why I'm here.
Yeah, that's good. That's good. That's a great question. Go ahead.
So are we in other precious metals besides gold, or
No.
what do we think about that at all?
I
Silver,
a diversified
platinum?
basket.
Yeah.
We do so silver is a little bit more volatile, typically speaking. There's less volume typically associated with it. The reason why we typically stick to gold centric is purely just based off of the volume and less volatility. The better probably optic would be to probably look to more of a diversified basket with commodities in general. But commodities are definitely they go through large super cycles. They're an input. They're not a company that's designed to make profit either. So it's something where we don't want to hold them long term, so to say. We want to be able to come in and out of them over time.
And some of the thinking behind that is with AI, for instance, there's going to be a lot more demand for copper. You
Right.
think about data centers and stuff, so that's the reason I'm asking the question is.
Yeah.
It is a small part of our portfolio, but that's why I'm asking. Does it make sense to have, diversification in metals? Specifically around the whole AI push.
I think that there's definitely an argument for it there. A lot of that push came early on though within the AI trade. So you've seen it come into more of a mature cycle at this point in time.
Okay,
I think we're almost closer to an exit than an
Okay.
entrance.
Okay.
So,
thank you.
this page goes through, this is as of the end of December as well. Just goes through the broader makeup of the portfolio as it currently sits. There is an appendix within the presentation as well that has a full list of all the assets that make up this position, as well as their sectors and the actual what we call efficient frontier of the portfolio, so the risk return trade-off of the portfolio. We're really targeting a moderate middle of the road portfolio with this current allocation. We are not swinging for the fences by any measure. That said, though, we do have 55% in equities, about a little bit shy of 5% in real assets, and around 38% in fixed income at this point in time. Traditionally speaking, as the portfolio grows, as the organization grows, you probably want to see a portfolio like this evolve into something more of a 60-40 or even a 70-30 type of portfolio if you're able to take on more risk. But again, those are all pending any type of distribution that might be needed from the portfolio too. So the biggest risk to any portfolio is just timing of distributions. If you have to pull out half the portfolio and the market's down 50%, it's not going to feel good. So we want to make sure we're always ahead of that. We want to make sure we're having regular communications with you guys as far as if you're expecting any distributions and making sure that we're preparing the portfolio for those types of events. Any questions on this page? All right. Am I doing on time? Pretty good. All right. This is we want to go this is the kind of shows the change in the portfolio over time. So again, going through COVID, you can see in 2021, that's when we actually made the shift to go further into equities. That's now kind of been solidified within the portfolio through that time frame. And cash has also been further deployed into fixed income at the higher rates whenever those eventually came into the market as well, and when cash started to come down in 2025. And so you can see that really reflected on this graph very well. That's why I really like this. It really shows a historic picture of the work that's been done in the portfolio over time. And this is our annualized performance, kind of looking at a year over year perspective. 2022, definitely the highlight of the worst year that we can see on this page at this point in time. That was the worst bond market of all time that y'all lived through. So that was fun. And it was a very tough equity market in that time frame too. But the portfolio, it held up fairly well by comparison. When you look at the broader fixed income market during that year, it was down about 13%. You guys did not participate fully within that. We were very short term in debt at that point, and maturities on our debt within the portfolio at that point in time. So that shift has been made very efficiently, as well as the equities really performed kind of right in line with the rest of the equity, the markets in that in general. From a 2023, 2024, and 2025 perspective, you have seen double digit, even 20% years within the equity markets within those timeframes. And that's really benefited the portfolio holistically, just in general. And that's what's really been carrying the growth within the portfolio at this point in time. And that is our presentation. The remaining pages are really centered around disclosures. So I will click through all those. Any questions?
Bruce?
What's your take on tariffs and inflation? I mean, you hear a lot about what they might do and nothing's really developed.
So Textbook wise, tariffs are a direct inflationary input, because you're directly increasing the price of something. As far as from a purchasing power perspective. So it is a double-edged sword. You're cutting, you're really kind of cutting prices up from that perspective. It's an artificial inflation as well. So if you kind of back out those numbers, you'd probably expect to see a lower inflation print at this point in time, which is what the Federal Reserve really kind of does when they look at it. But it's not as big of an inflationary number as you would think. The April announcement, what we call what do they call that day?
Tariff.
It was Judgment Day.
Oh, yeah.
Judgment Day. That environment, and if you look at the level of uncertainty, policy uncertainty that was derived from that would have been something that was very catastrophic from just a consumer perspective and from a household perspective. That's why you saw the dramatic drop, almost down 20% within the market within a couple of weeks. And you saw policy and political uncertainty rise to a level that was even worse than COVID, which is a whole nother mind-boggling thing to wrap your head around. So it was a very uncertain time frame from that perspective. Obviously, we're on the other side of that, and you're in a time frame where it's used more as a negotiation tool, it seems like at this point. So the markets have started to absorb that a lot more. But that's if we see another Judgment Day type of event, that would just not be good in general. So, which is why the markets reacted the way they did.
Yes, again, thank you for the insight. If I could go back to your projections for kind of the future of the economic market. There's been a lot of media talk about the AI bubble. And the stock market is at an all-time high. And there's also some discussion about a correction in that. For an institution like Gateway, obviously you're on top of all of this. What are you saying to your clients at this point? Stay steady where we are, become conservative, or you think that the market is still going to, I mean, in a big picture?
Well, I'm going to step away from probably our Wells Fargo narrative a little bit. I'll go out and say that eventually there is going to be a bubble that will pop around anytime you have large capital spending within a space where revenues aren't mature and revenues are uncertain. There's definitely the potential of a bubble, and there's going to be winners and losers through that process as well. So. There is going to be one company that outshines everybody else and actually makes a sustainable bet into AI. So it's really kind of trying to navigate that environment and making sure we have exposure to within that name to offset the risk of any other company going out of business, for instance, in this environment. But that bubble, the biggest difference between past bubbles is it's not being built on debt right now. So, really the market volatility that we would expect would be just on the back of, hey, we're not going to continue to spend billions and billions of dollars.
Build on enthusiasm.
Right. And so that once they wave their hand and say, hey, we're going to dial back our spending, that's actually the market event that will probably bring the markets, maybe hopefully back to not a nosebleed range. But it's one of those things where we should expect a 10% correction every year, right? So that's the market's just doing that would be healthy in general. And a 20% correction would be a true kind of full correction from that environment. And that would be something that was definitely a possibility, but we really aren't expecting that this year.
That'd be dramatic.
Yeah, that would be more dramatic.
Yeah, I would just add, that's the reason for the diversification and having bonds and having commodities. If you guys were at 80-90% equities, we would spend a lot more time talking about, should we pare back? But I think the middle of the road approach makes sense to me unless there is a large need for distributions in the near future.
Yeah.
And then the second thing I would just say is, I'm with Tyler. I mean, we're definitely getting into rarefied air, which makes old timers like me nervous. Who've been doing this 33 years. Greenspan talked about irrational exuberance in '96. And it wasn't until 2000, until the market started to struggle. So this momentum could be around for a few more years. I hope it doesn't get to that level because that just means the other side is going to be so painful. But
Yeah.
we're definitely watching it.
Oh, I bet.
We're definitely watching it.
Looking for any signs.
Yes,
Correct.
exactly.
You're one earnings call away probably, so it's.
I appreciate that.
Absolutely.
Thank you.
Thank you. Any other questions?
So I want to ask, I mean, has Kelly and Tyler kind of hit on what you're looking for as far as information about our portfolio? Is there anything else you would like in the future to hear about, or is this the right side of things?
Yeah.
Everybody's.
Just let us know how we're doing and
And we,
what we need to look for, so that's basically what we're wanting,
okay.
make sure we're.
I mean, there's so much data, we just want to make sure that it's the right.
Yeah.
We have a lot of data.
Right.
Yeah.
And we do interface, Elmira and I interface with both of them on a regular basis. So if there are changes or whatever, we'll certainly be communicating them.
And I think that's the main thing, making sure that we, the board, is aware of where we are, what we need to look forward to or be aware of, so.
Well, again, thank you both for the presentation, we greatly appreciate it.
Pleasure.
Thank you.
Thank you.
Thank you.
Thank you.
So definitely want to say thank you to both Kelly and Tyler for that presentation, and also to our board treasurer, Mark and Elmira, for kind of their stewardship of this work. So thank you to the team. It really does take a team to make all of this work and to ensure that we
No surprises.
are well positioned for the future. Okay, our next agenda item, we would like to move into, and again, really, if you look at kind of the flow of the day, we want to start with our investment. We're going to now go into our LCAP. And then Elmira is going to move into our budget update. And then I'll be sharing with you our budget priority recommendations and general board discussion. So our LCAP is a significant part of the work that we are doing, and also a part of our budget. So Assistant Superintendent Elliott is going to come and present our LCAP.
Okay, well, good morning. Good to see everyone today. It's nice to have a venue here at American River College. I am going to walk us through our LCAP mid-year report today a little differently than I've done the last 2 years. At the request of our authorizers this school year during our site visits, they were very specific about their request to make sure that when we do the annual report, it is one report for each LEA. In the last 3 years, I think I've given you this report as a condensed single report. So this morning, I get to give you 9 of them. We'll keep it.
I think which was good.
I will try my best to keep it very efficient. But I do want to make sure we hit all the requirements that we need to share with the public. So we'll make sure we show you those details today. The first presentation, I will go into much more detail just to make sure you fully understand all the components of it. And then as I move forward with presentations 2 through 9, you'll probably see me move a little bit faster. Feel free to raise a hand, stop me if you have any questions. I want to make sure I'm very clear about anything that you see up on the screen. We will start today with CCCS. We're going to go in alphabetical order. And again, the purpose of the mid-year implementation report for the LCAP is to provide an update on the progress towards our LCAP goals, implementation of actions, and the status of specifically our supplemental and concentration funds. As an organization, we serve a very high percentage of unduplicated students, low-income, foster, and homeless. So we receive a big dollar amount to provide extra supports for those students, and that's exactly what the SMC funds are for. This report will cover the status of our SNC spending, progress towards each goal in the LCAP, the implementation status of major actions and services across each of our sites, and any challenges or adjustments that we've identified mid-year to make sure that we're meeting the goals that we set. For CCCS, here is a budget snapshot that I was able to get from business services. Keep in mind when we look at the budget numbers, as Elmira always says, it's a moving target. So when we pulled these numbers, these are from early January. Even as of this Friday, when I looked at new numbers, there's different updates. So as you look down the sum of balance on the far right-hand side, that's the column that will show you how much we have spent and then have left, well, excuse me, that's the sum of what's left over, what we have not spent yet. So those are still dollars to be used towards providing these actions and services towards students. For CCCS specifically, when you add up the sum of balance, with some adjusted ADE numbers from second interim, we are fully encumbered for all of our actions across CCCS. Looking specifically into each goal, goal 1 is to develop college and career ready students, and you'll see a theme throughout in how we've structured this with all of our schools across each goal. Action 1 is specifically to fund certificated staff to support CCR. Action 2 is classified staff for those extra supports within the classroom. Action 3 is professional development focused on college and career readiness. Action 4 are supplemental programs and instructional resources to enhance our CTE and college and career offerings. Action 5 is specifically for events focused on college and career readiness, like our big college and career fair that we hosted back in October. And Action 6 for Goal 1 ensure school campuses have resources and supplies to provide a safe, clean, and effective learning environment, which we know is really the foundation for making sure students are safe, comfortable on campus, and ready to learn. When we look at the synopsis of our actions for Goal 1, all Goal 1 actions are implemented or actively in progress. Certificated and classified staffing supporting CCR is fully in place. Professional development is happening across the board, CCCS. Our fiscal status, the budgeted actions show strong mid-year execution through expenditures and encumbrances. The majority of funds, in fact, now all of the funds are committed, and spending patterns reflect expected mid-year timing and purchasing cycles. Key highlights for CCCS, their CTE programs are booming this year. If you've not been to CCS Maine yet, this school year, I recommend that you go see what Principal Brooks-Briones has going on there. It's pretty amazing to watch the growth from year to year and what's happening with CTE programs at CCCS. Goal 2 was focused on increasing academic growth and achievement for all students. And again, Action 1, the theme is certificated staff to support this goal. Action 2 is classified staff. 3 is professional development. 4 is program resources. And 5 is activities all geared towards enrichment and academic growth. And for Goal 2, which you'll see a lot of similar wording here as we go throughout, actions are fully implemented. For fiscal status, all expenditures and encumbrances reflect an active implementation of staffing for this school. And key highlights, these funds really help reduce student-teacher ratios within this non-classroom based setting and provide those extra supports through para-educators primarily that give academic enrichment to students. Goal 3 is to foster a positive culture and climate through providing a safe, healthy, and engaging learning environment. Again, I will not read them all this time, but it's a similar structure with actions 1 through 6 that you can see there. And then just as goals 1 and 2, all actions are fully implemented. Encumbrances indicate active delivery of services, and student engagement and social emotional supports are available across all sites, whether you're looking at virtual programs, the TK8 hybrid program, or the traditional non-classroom based with Stacking Center and CCCS Maine. That was presentation number 1 for CCCS. Any questions there?
Would it be, well, it's showing now, but if you could spend just a little more time on the first one and then you could run through the others. This one went a little fast.
Okay,
Yeah, so,
I can move back here.
yeah, just spend just a little more time on,
Maybe move into COA and spend your time there.
yeah,
And then.
Okay.
okay, yeah.
Sounds
And
good.
then the others would come, just kind of
You got it.
highlighting the others.
Okay, again, the purpose is just the same as I stated for COA Elementary. So I don't need to repeat exactly what's on this slide, but we're going to meet Ed Code requirements for this LCAP update. And then you're going to see the status of our supplemental and concentration funds. For COA, you can see, if you look at the sum of balance, you can see that across the board, we are overspent in some areas, underspent in other areas. And when I look at the final numbers here for COA, when you combine all goals and actions together, COA has about $1.1 million of the sum balance left. So it's still a good amount of dollars that we're going to be able to spend and provide more resources for students this semester. 1.1 does sound like a lot, but keep in mind their overall budget was nearly 8 million. So we're still, less than 20% sum balance. So they are doing a good job implementing their services across the board, all goals and all actions.
And then, Mr. Elliott, it may be helpful to orientate the board as to what they see with how we measure or how we monitor our LCAP actions and our voting, and
Sure.
then what this sheet.
Thank you. I'm happy to go into that. So on the budget side of things, when principals spend money to support any of the LCAP goals, we use, it's called an LO2 code, but we have a specific budget code to define each action. So when I show you the summary of actions, you'll see we have actions 101 through 106 for goal 1, actions 201 through 205 for goal 2, 301 and 306 for goal 3. So every single time a
Okay.
purchase requisition
Yes, that's good.
or direct pay goes through the system to support an LCAP goal, we mark it with that. The site marks it, Business Services verifies it, Joy verifies it as it goes through the, programmatic role. And we make sure that that expenditure actually does align with the supports that are outlined in the LCAP. So those are what the LCAP action numbers define. And then again, a brief summary of all the categories here for the budget. You'll see sum of budget. The sum of budget line defines what we originally started with for this year. So for goal 101, we have $811,000 committed to staffing to support college and career, certificated staffing to support college and career readiness. Action 102 to support certificated staffing, classified staffing for college and career readiness, so on and so forth. And if you look at sum of actuals, that is what to date we have spent out of those dollars. If you look at sum of encumbrance, that is what we have budgeted to spend. So purchase requisitions or staffing that's already been budgeted, but we've not yet paid it out of our books. And then you have sum of committed, which is simply the sum of the actuals plus the sum of encumbrance. And then the sum balance is the overall dollars we have left for that particular action.
Okay. That helps,
Yes.
yeah,
That's good.
that's good,
Okay.
it gives us a clearer picture of what we're talking
Excellent,
about.
thank you.
So we have an overall annual budget, and then this is probably broken out into quarterlies, or is it or monthly?
This budget right
No,
here.
no, I know that's a summary, but as far as the principals implementing it, right? It's on a monthly basis, correct?
I mean, it's an annual budget
Right.
that they can update and spend on any time up until they've hit the
Okay,
max.
so they don't have monthly targets.
There are not monthly targets to hit because the reality is, especially for staffing, you're gonna encumber 90% of that. Hopefully, if we can
Right,
pull the
if
staff
they
in
get-
August,
Right,
you'll see with COA, okay, great example. 104, that's supplies, right? You have a significant dollar amount left over there. You don't necessarily need all your supplies right up front at the beginning of the year, so they'll spend that periodically as the need comes about.
okay.
And then if they do go over in some areas with the LCAP, we want to do our best to stay in alignment with how we spend the dollars based on what the sum of budget was at the beginning of the year. But we have full ability as a whole team to say, you know what, we don't need as many supplies this year. That's why you see a few extra dollars in that line. We need more staffing because that's going to make the biggest impact for our students. And so you'll see an overspending in staffing, not quite as much spending with resources. And at the end of the year, that's part of our report back to you and to our authorizing district that, hey, significant changes or differences in budgeted spending, please justify that. Tell us why it was important and how you still use those dollars to meet the goals within the LCAP. So that's the end of the year report that we provide to all authorizers as well as this board.
Perfect.
Yes,
Does the state review the end of your report in terms of?
the state does not review it. It'll be reviewed by this board. It'll be reviewed by our authorizers, and it's reviewed by the county office of ed. And the county office of ed, that's really where the buck stops. So we receive an email after we submit all 9 of our LCAPs. Typically, our admin team, our cabinet will receive an email maybe in July or August saying, hey, we reviewed it, we're good to go. Or hey, there's a few questions we have. This doesn't quite make sense. We'd like more detail, and we can respond accordingly. So multiple steps of accountability through 2 different boards and then the county office support.
And you said the numbers 101 to 104 deals with action 1.
Everything with a 1 in front of it, this is how we coded it for it to make sense to everybody at the site levels. If it starts with a 1, it's goal 1. If it starts with a 2, it's goal 2. If it starts with a 3, it's goal 3.
And those
And
are the LCAP goals.
LCAP goals over, correct. Now, of
Yeah.
course, all of these, I don't have a chart that shows this, but we have our strategic action plan for GCC. Everything that you see here, every one of these goals aligns directly to the different focus areas within our strategic action framework. So we've done a great job across the whole leadership team aligning those pieces. And then, Lily, if I spend a little more time here, here's the actions 101, 102, 103, 104, 105, and 106.
Yes.
So on and so forth. Great question.
Sorry, it's just process, just so
Yeah,
that
yeah, it's
we're
great.
all aware of what the process.
Yeah,
is.
it's, and we can say, yes, we went over
Absolutely.
each one,
Exactly.
and we know what it entails and all of that, since this is a new requirement.
Absolutely. Okay, good on that piece? So again, actions for goal 1 and then for COA, all actions are implemented and actively in progress. Budget actively reflects mid-year implementation across staffing and instructional supports. As I just mentioned, variances in goal 1 actions reflect normal mid-year timing and are offset across other actions. If you're overspent here, we're going to be underspent in other categories. And then at the elementary level, right, college and career readiness looks a little different. It's not full CTE classes, but it's college and career readiness concepts built into regular curriculum. It's talking about careers. It's having parents come in and sharing what they do to earn a living, things of that nature. So that's all incorporated into the academic program. Again, actions 201 through 205 still look the same. And then here I'll just hit again because this is the one school that does have a lot of variances. If you look under fiscal status, variances and actions 201 and 202 do reflect some temporary staffing vacancies. There's a lot of unspent dollars there. And services, when that happens, are adjusted as needed to make sure we maintain the support as we're recruiting to fill those empty positions. And then obviously at COA with a significant percentage of English learners, there's a huge targeted academic intervention support system set up for English learners, as well as foster youth, homeless students, and students with disabilities. President Campbell, do you need more time on this or am I on the right track? Okay.
Yes.
Goal 3, fostering positive culture. Again, goals 301 through 306. And then all actions are implemented or actively in progress. Expenditures and encumbrances indicate active delivery of services and supports. Student engagement and attendance at COA, very high. All the after school programs, which aren't SNC funded, but it all comes together as one common goal for student engagement, is outstanding. I've been able to give multiple tours to elected officials in the area, to other industry folks, friends of GCC at COA this year, and every one of them walks away more than blown away.
Good.
And it is so fun to see their reaction. You get follow-up texts, you get follow-up calls, you have them wanting to come back with other partners. Just this week, we had our SMUD board member, along with the executive director and president of the board for the FEL Nature Center, come out and talk about how we can integrate programs with them through our after-school program, all because they walked the site and were blown away and they want to do more. So it's great to see that goal 3 being a part of our app. Okay, any questions on COA? Moving on to EPIC. Again, same purpose, meet ed code requirements and give you the status of our supplemental SNC spending. And then looking at their budget, EPIC's one that's been very consistent throughout the year. So my notes, I just have accurate with current updates to budget numbers. So there's really no changes, very, very small changes that have taken place from the sum of budget at the beginning of the year to where we're at today with our second interim. And you can see across the board, fairly well spent down. We have a few percentage points of our dollars remaining in some goals to keep on spending throughout the year, but most of these dollars have been encumbered and services are in place. Again, goal 1 actions 1 through 6, all this similar to our other schools. All actions are implemented or actively in progress. Any variances that you see, which are small with EPIC, reflect normal mid-year timing and are balanced across other actions to make sure we balance that LCAP budget. And then in EPIC, college and career aligned coursework, I want to affirm their counselor, Raina Police, she is phenomenal in this area of CTE. Every time you walk on campus with her elementary kids and her middle school kids, she is pushing careers, she is pushing workforce development. And Principal Koch has done a great job building her up to support specifically college and career readiness at the K8 or TK8 level. A huge affirmation to the team.
Mark, can you?
Yes.
What are some of the areas that she's focusing on? What pathways that she?
So it's a broad,
General?
yeah, there isn't a pathway she's focusing on. It is the broad spectrum of career exploration.
Right.
She runs job shadow days. She gets kids out to field trips. I missed the day they had their job shadow day this year. How many? I mean, they must have had 20, 25 different people from the public
And we were there.
on campus talking about careers. So that's the kind of work that they're doing.
So it's broad.
It's very broad, because at that level, that's what you want to do.
Exactly.
It's exploration, it's awareness, right? And then as we get into middle school, hopefully we fine tune it down just a little bit. And in high school, we want to get you hooked on a pathway. Even in high school though, if you take a pathway for a semester or two and you realize that's not for me, we're not gonna forbid you from switching pathways. Yes, we want that mark on the California dashboard for pathway completers, but it's more important that students find out what their interests really are. So if they need to switch, we still allow pathway movements throughout high school. Obviously, the more work we can do in middle school to get them prepared and understand what pathways we offer, the better we'll be at helping them choose the right pathway across our 4 high schools.
I know she's done a phenomenal job. It would be nice to see that whole approach be replicated in the other schools as well. Will she get a chance to speak to any of her counterparts about what she's doing?
Well, they do have monthly counselor meetings, so there's a lot of collaboration that happens there. So yes, that is out there. It is something we could probably continue to do better at, because we know right now she's our rock star.
Right.
And we need to make sure we're taking our rock stars and
You're
spreading them
getting
out
more rock
across the
stars,
district. Absolutely,
yeah.
build new ones. Let's empower others to do it.
It's a
So we'll
best
continue to
practice.
work on that. Yep. Thank you. Goal 2, again, actions 201 through 205, look similar. And then all actions are implemented and actively in progress. Again, high English learner percentage at Epic, so targeted academic interventions for English support is a big piece of goal 2 for Epic. Goal 3, dealing with culture, again, same goals 1 through 6. And then all actions are implemented or actively in progress. Lots of certificated and classified staffing supports for student health, safety, engagement, and retention. And again, you'll see this as a theme. I'll repeat myself multiple times, but very high engagement. When you look at our elementary schools, there's not a day we walk on campus where you don't see kids loving life, running up to their teachers, running up to administrators, running up to us when we're on campus to high five us. There's truly a sense of joy across our campuses. And I think we all know you really see that at the elementary sites. And it is special, and a lot of that is due to this goal 3 and how we really make this a focus, not just with our S&C dollars, but with all of our dollars that are invested into engagement. All right, any questions on Epic? Futures High School, same purpose, meeting ed code requirements to share this information with the public, and we're going to review S&C spending specifically in this report. Futures, again, we had pretty accurate budget numbers at first interim, so these have not changed much. If you look at the sum balance, we're a good 80 to 90% spent down across almost all categories, overspent in just a few, which will balance out with some of our unencumbered dollars and certain goals and actions. But looking strong here and evidence that our LCAP actions are being successfully implemented. All the goals look similar, goal 1. And all goal 1 actions are implemented or actively in progress. And I'll just say, I'm saying that phrase a lot. That is part of the requirement of this report, is to make sure the public knows they are implemented, actively in progress, or not in progress. And I'm proud to say that we've done a very intentional job across GCC. You're going to see me say this for all of our schools, but all of our goals for all sites have been moving in the right direction. Expenditures and encumbrances reflect active mid-year implementation of staffing and instructional supports. And again, futures, CCR is a big thing. We've really enhanced the offerings they have this year, specifically through the early college program. It's very exciting to see kids getting more motivated to do college coursework while in high school. And this is what sets futures apart now and will continue to set futures apart over the next few years as we grow this program. There are not a whole lot of early college programs throughout Sacramento County. So for us to build one, grow one, and then do it with excellence where we can tout it throughout the region is going to be a big deal for futures and a big deal for GCC, not just on the marketing, but because it's making a huge impact for our students being really ready for college before they enter their freshman year at the university.
And we're trying to leverage that in the community as well. Man.
Absolutely. Yes. I know I talk that language all the time. I know Joy and Superintendent Sample also talk it all the time. It's exciting. And when, I sent my own son to one of our schools because we do such a good job with dual enrollment. And when people ask me, well, why did you take your own son out of the traditional school system and put him here? I say, because the early college program
And
was available. And the superintendent's son as well, right? I think one of the best things.
that we have to really.
It's a great thing.
It's a great thing. And there's nothing that makes me more proud, and I'm sure for Cabinet and everybody who feels the same, when we can have our own kids go to our schools. There's your evidence that we believe in the mission.
I would have brought my grandson over.
Absolutely.
Yeah, in Southern California.
Yeah, so that's a huge piece, and I'm so proud to be able to say that
I am.
for myself, for Jason, and other staff across the GCC. Yes. All right, goal 2.
We got 99.
I'm sorry. We're recording. All right, goal 2, all actions are implemented and actively in progress. And again, futures, significant EL population, working hard on targeted academic interventions for all demographics, but specifically that EL group that we have a high percentage of across the site. Goal 3, actions 1 through 6 look similar. And then all actions are implemented and actively in progress. I know there's a lot of work around student clubs. A big piece of engagement for futures has been after school programs. I really want to affirm Maisha Britt and Ramon Garcia, who's our community engagement specialist for futures specifically. For years, we've talked about after school programming at the high school level, and it just hadn't happened. This year, it's happening, it's fabulous, it's impactful, and students love it. So again, that goes to a lot with our community schools work, but also with our LCAP goal 3. Any questions on futures? GIS, we're halfway done. Trying to go fast, but not too fast. Again, we all know the purpose, meet EdCode requirements, and review our S&C dollars. For GIS, you're going to see, again, a balanced budget. Let me look at my final numbers here. So currently, the sum balance is about $400,000 left for the year out of a budget of over $2 million. So looking good, worried about that 20% left range, which reflects, adequate spending and on track progress for providing supports to students. Goal 1, all the same actions. All actions are implemented or actively in progress. Expenditures and encumbrances reflect active mid-year implementation. You'll see higher commitments in action 101 driven by staffing and program delivery costs that are offset by lower expenditures in other goal 1 actions. And then again, at the elementary level, college and career aligned coursework remains accessible, working on integrating those basic career exploration components into the elementary level curriculum. Goal 2, actions 1 through 5, all the same. And all actions are implemented or actively in progress. Remaining balances in goal 2 are offset with the overall LCAP again. So even though we're over on a few lines there, the overall budget is still good and we have $400,000 left to work on providing these resources throughout the school year. And again, high EL population. So this one is key, targeted academic interventions for ELs, your paraeducators and other supports on campus. Goal 3, actions 1 through 6 all the same. And then again, all actions are implemented or actively in progress. Variances in actions 302, 304, and 305 just reflect timing of services and activities and purchasing cycles. All actions are being fully implemented. And by the end of the year, you'll see those $400,000 that are remaining spent down on these actions. All right, HLA. Same purpose, meeting EdCode requirements and giving you an update on S&C spending. HLA does have some dollars left over. Let me find my tally for total numbers here. Okay, so we are just about fully expended for HLA when you add up, look at the sum of budget in the beginning to the sum balance. When you add all those together, we're looking strong as far as implementation of services. Same goals and actions for HLA as the other LEAs. And again, all goal 1 actions are implemented or actively in progress. Where LCAP funds remain unspent at mid-year, the school is utilizing other available funding sources to continue supporting the LCAP goals while preserving LCAP resources for planned second semester implementation. Sometimes there are buckets of spending across different resources that really meet the same goal. So a site might choose to spend some Title I funds on this goal of academic intervention services instead of LCAP. So that's where you might see some variation. And if we ever have, say we have $150,000 left over in goal 2 at the end of the year, when we do that report and we say, hey, what are the justification? Why weren't those spent? We simply just say we had Title I dollars that were used to support students in this way. And the goal was fully implemented just using some other dollars. And that is okay to do as long as we can show how we're accomplishing the goal. Goal 2, actions 1 through 5, the same. All goal 2 actions are implemented or actively in progress. And again, targeted academic interventions for English learners, foster youth, homeless students, students with disabilities, and academic enrichment activities continue to expand learning opportunities. And goal 3 actions 1 through 6 are the same. All goal 3 actions are implemented or actively in progress. Expenditures and encumbrances indicate that the majority of goal 3 funds have been spent or contractually committed. And student engagement, attendance, and social emotional supports are available across the school. Again, same with after school programs, HLA's got it going on. It's a very engaging after school program available to all students. That after school program is not necessarily S&C funded, but a lot of ELOP dollars. But again, that's how we integrate all our funding buckets to accomplish the overarching goals for GCC schools. All right, last 3, on to the 3 SAVAs. Same purpose, meeting EDCO requirements to share this information with the public, giving a status of LCFF supplemental and concentration spending. Here we are spent fully for all 3 SAVAs. You're going to see here overspend in some areas, and Omira will work with our teams to make sure we balance that all out by the end of the year. But all actions and services are actively in place. Yes.
Just a minor point, but as a budget guy, I like to see totals at the bottom of top.
Got it. I realized that. I'll make sure I have that next year. This morning, I got out of my bed, looked at this and realized I didn't put totals in there, and that's what I printed out here for me, but it was too late to add. So I will take that feedback and do better next year with it. Yes.
Do you think you need to do that before it goes into our?
Do not, because the requirement for this isn't the overall budget. The requirement is action by action. You must do action by action. So this meets the requirement. I would be happy to share what I have here. This shows the sum for all. I could share this with Melissa, and I'm sure she could share it out with the board just so you have those.
That's okay, I was thinking about that authorizes, because.
Yeah, no, this fully meets the requirement.
Only thing it's requirement.
Yep. Goal 1, college and career readiness, all the same actions. All actions are implemented or actively in progress. Overcommitments in action 101 reflect staffing and service costs that exceed LCAP allocations. These costs are being supplemented with general fund resources, ensuring continued implementation of goal 1 services without impacting other LCAP actions. And obviously at SAVA, CTE is their bread and butter, and a lot of dollars are invested in CTE teachers, resources for the CTE classrooms, things of that nature. So you'll see that across the board. Goal 2, actions 1 through 5 are the same. And again, one typo, sorry about that, but all goal 2 actions are implemented or actively in progress. And the negative balances you see in actions 302, 303, 304, and 305 reflect timing adjustments and cost alignment across related services. Overall costs are balanced across all LCAP goals, with general fund resources supplementing LCAP where needed. Goal 3, actions 1 through 6, all looking the same. And then all actions are fully implemented or actively in progress. And student engagement and social emotional supports are available across sites, again, for schools, the independent study schools, serving very underserved neighborhoods. This is key that we provide these extra social emotional supports. We're excited to do this not just at the school site, but through our community schools work, and hopefully within the next 2 months, opening up the Gateway Family Center to make sure we're providing these social emotional supports to students on a more broad basis across the GCC. On to Sac City. Same spiel, purpose to meet the requirements and sharing this data with the public and give you the status of our S&C spending. You can see again here, fully expended all the way down. We are a little overspent on solid LCAP, so we'll be looking at general fund dollars and any other buckets that Omira can identify with her team to make sure we balance that out. Goal 1, same actions 1 through 6. All actions for goal 1 are implemented or actively in progress. Expenditures and encumbrances reflect active mid-year implementation of staffing and instructional supports. And again, huge emphasis on CTE, ensuring that we have multiple pathways for students across all of the SAVA schools. Goal 2, increasing academic growth, same actions 1 through 5 for goal 2. All actions are implemented or actively in progress. Again, targeted academic interventions for all those subgroups of students, but really at the SAVAs, working with paraeducators to get more one-on-one tutoring and support for students that are coming to the school significantly below grade level in math and English. And then goal 3, same actions 1 through 6. All actions are implemented or actively in progress. Again, we're fully expended. Any amounts exceeding LCAP allocations will be covered through general fund support, maintaining overall fiscal balance. And last, SAVA L growth. Same purpose, meeting ethical requirements to share this information with the public and reviewing our SMC goals. Elk Grove's actually looking pretty good with their numbers. They are just about balanced out at a even $0 for a sum balance across all goals and actions. Goal 1, same 1 through 6 as all the other schools as far as actions go. All goal 1 actions are implemented or actively in progress. Overcommitment in action 101 reflects staffing costs and is offset by available balances in other goal 1 actions. And again, college and career aligned coursework, including CTE, remains accessible for all students across all of the SAVA campuses. Goal 2, academic achievement, goals 1 through 5, actions 1 through 5, I should say. All actions are implemented or actively in progress. Actions 201 and 202 show strong mid-year execution, with most funds being expended. And again, making sure we provide that targeted academic intervention support for our unduplicated students with paraeducators and student support specialists across SAVA. And last one, goal 3, fostering positive culture and climate. Actions 1 through 6 look similar to the other schools. And again, all goal 3 actions are implemented or actively in progress. Negative balances in actions 303, 4, and 5 reflect timing adjustments and cost alignments. Spending patterns align with delivery of engagement, attendance, and student support initiatives. And again, student engagement is key. If we're going to bring kids that have been disengaged from public education at their past high schools, we have to put a big emphasis on what are we doing to make sure, not just through CTE, but after school programming activities, mentoring programs, things of that nature. What can we do to help kids connect at that relational level? And that's where a lot of these funds go. And there you go. I'm a little over time, but for 9 presentations, I hope I did okay. Yes, Jeff.
Well, Elliot, thank you for your extensive presentation. You and I were both around when Governor Brown created the LCAP model.
Yep.
And I'm sure he's probably sitting on his ranch somewhere now, overlooking his estate. But my question for you is, is that we both worked under prior educational models, and this particular model is this model an improvement really on what we had before, or is it just somehow going through trying to create a matrix that looks
Well,
creative?
Maury's opinion on that is that the idea of the model is an improvement because you got rid of all these categoricals. But if you look at the budget that Elmira had to put together now, every year as new bills come out, new legislation is passed, all those categoricals are really coming back. So if we just stuck with LCFF, awesome. The intent is great. It's very clean. You understand what it's supposed to be used for, how it's supposed to support this S&C component of LCFF, support your most underserved students. But it's getting convoluted again with all the different buckets, and we just have to learn to work within that. And,
Yeah, that's for us with the 9 charters, it does.
Yep, it's Elmira's job. I tell people there's no CBO that works as hard as her because nobody else that I know has to be mad at these.
Yeah, they were going to eliminate all the special programs, so we didn't have to deal with all the other.
Yeah,
But that's come back.
I'm thankful more money is being pushed to our system through those buckets.
That was.
It'd just be nice if they could combine it and it's a little more. Yep. My take at least.
Okay, I appreciate that.
Yeah. Yes.
Super information. Do you encourage the different sites to keep something unencumbered until like mid-year? So that they can make adjustments to what's happening on the ground?
Great question. That really is going to vary site by site based on what Joy and Elmira on the program side are looking at and seeing with enrollment trends and what the principal says their goals are for the year to accomplish providing these supports. Some schools will intentionally save and others say, no, I need this now starting day 1. So there is no direct system for that we use. It's site by site, budget by budget as these two lead the way.
Is that it?
Okay, well, thank you for your time today.
Thank you for your time. And
I have
thank you
to
for.
cut out, so I'm not ditching, but I'm headed to the Capitol for a hearing on community schools. So
You
just wanted you to know,
can't.
yeah, just wanted you to know I'm not leaving.
You're
Just
not
because,
leaving.
but maybe
Just
I'll
take
go
a
reach
break.
back to that.
Okay,
Yeah, all right, thank you
thank
all.
you so much for
You're
your
welcome.
hard work. And all of you, because it takes more than just one
Yeah,
person to
that
do
is
this.
a big team effort.
Thank you. board members, I think you might need to take about a 5 minute break or so. So let's take a 5 minute break to regroup and then come back. So. We'll take a break.
Sounds like
Sounds
a plan.
like a plan, okay. from our break. And what's our next thing?
All right, thank you, Madam President. Welcome back. One of the things that we really work hard to do is to have quality governance. And one of those areas of quality and high best practice governance is for the board to annually evaluate yourselves in terms of the work that you're doing. So at this point, I'd like to turn over to the board president for the board's annual evaluation.
Thank you so very much. And just to give the synopsis, we received our evaluation some time ago. Through email, and each of the board members had to rate themselves and the board on how they felt we were doing. And when I got back the results were outstanding. I think we feel we are doing a great job as an executive board, as a board of directors. So quickly, we're going to go through, Ms. Melissa, would you start bringing back down, please, so we can just kind of go through each of the areas very quickly. We have about 15 minutes for this item. So the very first one, the board operates on a set of policies of 100%. And all 5 board members, I need to say this, answered all of the questions. So you can see on the board where we are. And anytime you have comments or questions that you need to you want to talk about it, please do not hesitate to interrupt and just say we need. And question 2, the executive committee meets regularly. You can see that. Question 3, the board meetings are well attended with near full turnout at each meeting. We had one area of concern, the rest were, as you can see, slow down, 80%. One question, any comments on that from anyone? 9, no. Okay, moving on. And if you have any comments or questions, please don't hesitate. Nomination appointment of board members. And this is one that I came down lower on, because we haven't had any new board members. And I think as a board, we need to come up with a system that we can put in place and utilize when we do get board members, because eventually many of us will be leaving. And so we need to have something in place to that will be ready for new board members coming in for the succession. Any comments on that? Anyone?
I thought we had some.
Well, I was the last one and I can't even remember how long ago that was, 15, 17 years maybe. And I met with each of the current board members and they interviewed me and then made a decision, and I was later called and said, we would like you to be considered. So that's the only thing that I remember. Any other comments?
I thought we had a process.
Well, I think we're developing a
Yeah, right,
process
we're kind of going through that right now.
For nominations and selection of board members in the future. I think it's really, I agree, it's very timely.
Yeah,
And I assume it'll come back to the board for us to get an approval.
That is good.
okay.
I would just say the only thing is that at some point, we should probably agendize talking about succession plan.
The succession plan, yeah. Yeah. Okay, very good, excellent. And then the number 5 goes along with that. And that's what we're talking about. So that was the area of concern for a couple of us. Yeah. Good. So we're all on the same page. We really are thinking very much alike. Each board meeting includes opportunities. That was a 100%. 5 complete questions. Same thing with question 7, the board follows this policy. Very good. I'm just running through them until we get to one that you feel you need to discuss. Board full understand and supportive of strategic planning, 100%. Board members receive meeting agendas and supporting materials. 80% said yes, we have one concern. Any comments or questions on that one? On that item?
I'm just said that I think I need a little more time.
You need a little more time.
For some of the agenda. Because the agendas come and we only got a day or so, then I got other things that I'm doing, like on Saturdays and Sunday, they could make on Friday night or Saturday. I may not look at it till like Monday,
Oh, okay,
so.
yeah, okay, so. That's an area of concern for one board member, the rest of us, so. And maybe something can be done about that.
Madam President, if I can just get an area clarification. Is there a particular aspect of the board agenda?
Especially the budget.
Okay.
I get the budget, I like to go through it, look at it a little more, fine details.
Okay, so when we have the budget audited and the budget report, so you like to get it earlier. Yeah, because I usually, I get mine, I get it on Friday. And Saturday I start going through mine, because I want to make sure I read all of the information. So between Saturday, Sunday, if I haven't read it by Monday, I'm shaking, because I thought, oh, there's something I probably need to address, so. I feel comfortable with it. But I hear what you're saying, but
Thank you for that.
thank you. Okay, very good. Moving on. Any other comments, questions on that one? No, all right. Okay. The board actually oversees the financial performances. Again, we had one. And 80% says yes. Any other comments on that one? That's item 10, question 10. And I think you probably have answered that. Yes, you've answered that. Needing a little more time. Good, thank you. 11. Board receives regular financial updates? Yes. Very good. 12. Regular reviews, evaluates performance of the superintendent CEO? Yes.
Absolutely.
Absolutely, no problem there. Okay, and engages in discussion of significant issues. 80%, and I think we are getting much better with that. When we go into closed sessions and we have discussions on issues and what have you. Anything else on that one? One person, anybody, any comments? No? I think we're all feeling good about our discussions and significant issues now. Very good, excellent. Well, then, I got a 100% on question 14. Any comments? That's on the board chair. No, all right, moving on. Moving right on. The board communicates the goals and expectations for the board and organization with the community. And I rated that one a little too, because I don't think we do a lot with the community. Any comments on that?
We do a lot with the community,
I know you do,
but the community doesn't.
do a lot with that, so.
Right. That's.
Yeah.
I go out and get the community to come in and look at the school, HLA,
Yeah,
get people from the Wells Foundation.
yeah, with HI, but
You know,
do we do that with all of the other schools, Salva and those, you know, and
I don't know about.
futures, yeah. Any comments on that, guys?
Well, would
What
that-
can we do differently?
Yeah, what would we? do
That's-
different?
Yeah, we think the same thing. We try to visit the schools, I try to visit schools, I try to attend many of their activities. And that's how I do with the community, like we did the summit just this past couple of weeks, some of us, we do what we can, so.
Well, I think with those, when parents are involved, or
Mhm.
or when we have the event at the Aerospace Museum where we
Yeah.
had vendors and those folks there.
Yeah,
I tried to engage
I do
with
too.
them.
Yeah.
When we had our last event, we had vendors along the wall, and then you and Jason chatted with them. I did the same. I kind of look at that as engaging.
and engaging
With the
community,
community. I don't
Yeah.
know what else we could do.
yeah,
Well, I have a problem with it not at night.
I understand that, yeah.
I can't see them lines in the street.
No, it's understandable.
We understand
I
that,
can't go
yeah.
somebody.
Those of us who can do, and if, you know, and when you can, you do, that's about it.
Yeah.
That's the way it is. We do what we can, and we try hard to do the best we can. Okay. This year, the board experienced an executive level transition. Any concerns? There was one that had it in at one person. Any comments or questions on that? What do we need to do differently with our executive level transitions?
And Madam President, I think this probably was a carryover from a question that you had a couple of years ago when you transitioned to superintendent.
Right,
So
okay,
that the superintendent knows of, you have not had a superintendent transition this year.
no.
That I know of.
Yeah, yeah.
Unless there's something that comes out of this moment and.
I don't think everything's gonna come out. Am not fit. Okay. And we had some comments. And the question was, part of government saying, what specific assistance or resources do you require from the superintendent? Information is continually being provided. I need communication in a timely manner and budget and reports, and we got that. That's good. And then the other comments was, what do you perceive to be the most significant challenge the board will face over the next 2 years? And it's interesting, when I read that, I think we're all kind of saying about the same thing. And as we look through reduction of fiscal resources is a challenge. Maintain adequate staffing and funding, same thing. Finances, same thing. Financial and leveling enrollment and declining state budget, you know. Thing goes back.
I had one of them.
Yeah, you have one other, okay,
Hey,
AI. All right, AI as a challenge. Tell me what you mean by AI?
what I mean by that is that AI is taking over the field, they're not doing anything, they can go and get everything they want on this. This is their number one thing.
Yeah.
So they go to cell phone and put whatever they want, and it comes to them, if they can't do a problem, then they have to work it out.
I talked with Dr. Gold just last week at the summit, at the parent summit, and we talked about AI. And one of the things you're saying is having control over AI and making sure that teachers and students really understood the significance of AI and how to use it and putting in programs that mandated how it was used. Did you talk, Mark?
Yeah, I mean, I've had some conversations with Dr. Gold about
Yeah.
it. I think they are trying to create safeguards and
Yeah.
they're trying to create policy and obviously the work they've done on
Fine.
curriculum,
Mhm.
you know, using AI as a tool. You know, I think I think we're trying to get our arms around it, right? I mean, it's inevitable.
Yeah.
You know, that kids are gonna use that, but I think we're taking the right position on it.
Yeah.
Our approach.
I
I
think
don't know what else we can do.
that just
I
monitor,
mean, I
and
know it's a
you've got a
concern, but I
committee,
agree with you.
we've got an active committee
We've got
that's
an active
working.
committee, right?
Yeah, and the committee is working very actively. She's attending conferences and also presenting. So we are at the forefront of AI at this point, the district, the organization. Because Dr. Gold is doing presentations and telling others what we're doing and how we're working. So we've got a good beginning.
And we also had one of our vendors at the parent event we just had. who recognize them, I believe. For their interaction with us.
Yeah.
On that topic, so.
Another topic is social media.
It's what?
Social media.
Yeah, social
One
media.
country has banned it till they're over 16.
Banned use of telephones, you mean, or what? Social, you said social
media.
Well, you know, that,
I'm reading that, I heard that on the news, I said, wow. But, I don't know.
yeah. Any other concerns, any other questions, anybody that we still have another one, but I don't see any significant, everything is either 80%. Yeah, so it looks really good. Anything else that comes to mind? Okay. The board members fully and positively participates in discussion. This is what we're doing right now. 100%. So. 100%, 100%, 100%. There it is, 100%. All right. I get that the board makeup is diverse with experience, skills, ethnicity, gender, denomination, age group. And age group, I'm not sure. We all were kind of hanging in around the same. Yeah, some of us old now, some of us have birthdays too. But for a group of
Everybody on the board, different. categories.
with the skill set, and that should have been, I think that was 100, because we do utilize the skill sets of everybody that's here. You know, it was Jack who talked about AI the very first time I even heard of it. I didn't know what he was talking about.
That's,
Knowledge, you
if
know.
I only invested all of my savings in AI stock.
Why did he do that? We would be, and then you would share with all of us. But yes, you know, Bruce with his budget knowledge, you know.
Well, the education and business
Yes.
balance, I
Yes,
think we have a
it's
lot.
a good balance,
Right.
and we utilize each other's balance. When Bruce talks, we listen, when Jack talks, we listen, when you speak, we all listen. Because we're coming with different skill sets, and that's good.
Yeah.
That is very good, I think that was one here. The board demonstrates a deep commitment to mission and vision of the organization. So with that, board, unless you have other concerns or questions or anything that you individually want to bring up, we're open to that now. And on the response of question 39, that's where I am. We have a good working relationship with each other, and we utilize the experience of each other. Now, does anyone want to disagree with that? No, good. I think our board works well together. I really think so. And I have enjoyed working with this board continuously since I've been here. And I hope you all feel the same way, that we work well together. We come in, we do business. There's no, I've been on boards where it's not a good place to be.
The only thing that Lily and I will say, if I'm gonna speak for you, is we wish our meetings were later,
Yeah,
our retreat.
in particular, our all-day meeting, because some of us have to drive a long way, but that's our problem, I guess. All right, anything else? Yes,
I just want to, I really appreciate that Jason is focusing this retreat on finances. I just want to point that out. Because
yeah,
with what's happening now across the state, it was probably today and probably a number of board meetings.
yeah. Thank you so much. Any comments from you, Superintendent?
No comments other than from, on behalf of really all the staff. We definitely appreciate the board and we appreciate your governance, your leadership. If we had a vote on this, we would also be in a number of the same places that you are. We feel supported. We also feel that we're held accountable. And so those are all the aspects that we definitely feel from the board. And to echo Director Turner's thought, and I think all five of you said that your biggest concern is finance, budget, finance, and Elmira and I are definitely in that same vehicle, which is why today's meeting is really directed around this. So thank you so much for your support.
Thank you. Okay. All right, we're moving on. Let's see.
So I'll introduce Elmira, our CBO. Really, the majority of today's meeting, again, is about our budget. I want you to know that everything that I feel Elmira, myself, Joy have really worked hard is to keep our work student focused. What are we doing to support our students, which is our primary objective and goal? So today, we're going to walk you through what I call kind of multiple steps. The step that Elmira's getting ready to walk you through is, here's what the governor is saying, here's what we're hearing in the field, here is where we are today, here is where we're looking in the future. And then I will come and share a little bit about what's our priorities as we move forward to the next step. So with that being said, I almost said my partner in crime, my co-conspirator. No, those are all wrong. Elmira, the CBO.
Good morning.
Good morning,
Governor,
good morning.
Superintendent. So I'm gonna go over the governor's budget update, like Superintendent Sample just mentioned. And towards the end, we'll get more specific into where we're at financially with all our school sites. And yeah, entertain any questions after. So our agenda, I'm gonna go over the governor's January budget. We're gonna talk about federal state funding for K-12. We'll go over the enrollment, ADA, and multi-year projections, and then just go over our reserve guidelines. Okay, the first thing that the governor always talks about is our economy and how California is doing. And as you saw from the presentation that Wells Fargo did, AI is a huge marker in how the stock market has increased. So, but it is also masking weakness in other industry sectors. So if that was to kind of flatten out, we're going to see a change and fluctuation in the stock market. The income trend is positive. And inflation continues to increase, as well as our consumer price index. Our labor market, we have 5.9% unemployment, our average is 5.5. Housing, they're not building a whole lot, but there's high costs to borrow. And then some of the uncertainties and risks are the Federal Reserve policies with tariffs. And then some other the geopolitical conflicts and volatility in capital gains and labor shortage due to immigration enforcement policy. So those are all kind of things that impact our economy and kind of where we're at currently. Here's the stock market, kind of thinking back on how our portfolio is doing. This is partly the reason why we have been seeing double-digit increases in our portfolio, and a lot of it has to do with the AI jump. And so you can see how different in how it's doing to the S&P 500s versus the non-AI industries. So taking that factor in, we wouldn't be doing as well revenue-wise with our stock market. The next slide is our big three taxes, which is personal income tax, corporate tax, and sales tax. And due to the revenue increase in most companies, we're seeing corporate tax jump in the very last enacted budget / governor budget. And from the 25-26 and the 26-27, you can see that the corporate tax is what's really driving the increase in revenue. So I just wanted to point that out. In 26-27, there's a $19 million jump from the enacted budget to the governor's proposal. What I want to point out, though, even though the governor gave us a rosy outlook on what's happening with the state, we do have some concern moving forward in the future years. So you see, for 26-27, he has a $2.9 billion deficit that he can address with some reserves and other maybe maneuvers that he can do to flatten that out. But you see the really huge impact in 27-28, and obviously he'll be gone by then. He'll leave that problem for somebody new to deal with, but we're looking at a $22 billion deficit in the 27-28 year. And so part of my job and the organization's job is to be aware that that's coming and for us to kind of prepare moving forward. In contrast to what's happening in the state, this is just specific to the Prop 98 revenues or LCFF revenue. And what's happening with those dollars in terms of where we were at enacted versus where we're at the governor's budget workshop. So in the middle, that is our current 25-26 year. We were projected at 114.5 billion. And we're coming in at 121.4 based on where revenue trends are at currently. And so that is quite a bit of a jump. And that's actually being projected also for the 26-27. The increase is just kind of mirroring what's happening and what we're seeing in the current year. I want to go over some terms that have been used at the governor's office and how they are, you've heard of the maneuver, you've heard of maintenance factor, you've heard now the new term is settle up. And so this is Proposition 98 sets a constitutional minimum funding guarantee for K-14 education in California. Right, that's what Prop 98 is. The state budget is built on revenue estimates, not final numbers. So we're estimating, we're always truing up, we're always working to kind of close that cycle, close that book, close the books. When actual revenue comes in higher than projected, the minimum guarantee increases. The difference then becomes the settle up obligation, meaning it's a true up, right? So an example that I'd like to give is the governor's January update was $8. At the end of the day, we got 10. Those $2 are now our settle up obligation. Just giving you a real simple example. I like to carry my slides and I like my security blanket. Okay. The next one is just the timing of how these work. So we're just now know what our amount is for 24-25. So we're always almost 2 years behind, year and a half behind. Expected payment would be for until 26-27. And then you have some estimates based on where the governor's budget was. There's going to be a 5.6 billion estimated settle amount. And then we're probably not going to get payment for that until 27-28. And so so as the deficit, so remember that $22 billion number, this will be very important conversation and for us to really pay attention that we're not going to be getting our dollars right away. And if the state's in trouble, when are we going to get payment for this, right?
28.
So the other one that was brought up was maintenance factor, and this was triggered on the 23-24 budget when Proposition 98 was suspended. I was gonna say canceled, but I was like, that's not the word. And so that has, there was an 8.3 billion. I'm sure that number kind of pops in your head from previous budget conversations. The payment was done of 7.8 billion in 24-25. They still have an outstanding balance of 585, but that's very minimal. And so this is only when Proposition 98 gets suspended. They don't have enough money with the reserves, the rainy day fund to pay us back, and so that's what this was. The rainy day fund is a state reserve, right? And so we started with, I think it was, it's that slide, 6.8 million. And in 25-26, we're gonna increase 4.5, so that's the second to last number you see on the 25-26 column. That's what's gonna be entered into the rainy day fund by the end of this year, making it 11.3 million, and then moving forward into 26-27, then that increases an additional 4.1 into 14.3. So that's where the state is with their reserves. And so you can see that even if they were the 2.9, they could use some of these funds to kind of offset their deficit for next year. But when you look at the 27-28 year with 22 million, they're not going to have enough to cover that. So there is going to have to be some cuts, some reductions, or some addressing to do with the state. Proposition 98 also has a reserve called the Public School System Stabilization Account. And we had swept it completely out at the end of 24-25. But based on the true up numbers, remember the settle up numbers, we had more revenue. So there's a proposition that was passed in 2014 that requires deposits when capital gain revenues is above average and requires withdrawals when Proposition 98 minimum guarantee is below prior year funding levels. So we got more revenue once you do the true up or you kind of close out the year. We just closed out 24, the state just closed out 24-25, giving us our new settle up amount, right? And so it requires them to deposit 3.8 billion for the 24-25 year. So that is what that 3.8 number is. If you recall, we had used all that up at the end of last year. We thought we were at 0. So that is what the 3.8 billion is. And then we have an increase. We're going to make a deposit of about 700 million into for this year, and then there's a mandatory withdrawal of 407.1 million. So it's this balancing act that they do with the amount of revenues, the excess, and how much they're required to deposit into this account. But this is just to give you some perspective of what is the state, kind of saving up for, and what we're going to be dealing with in the coming up years. This is just our grade span adjustments and where we're at and where we're being funded via the base. So the 10,256, just looking at the very first number for TK3, that was the prior year number. They're including the 2.41% COLA, and then also the grade span adjustments and the TK add-on at the bottom of 5,679 per student. And so last year that number was in the 6,000. So I'm assuming that because we get increases on the base, they're seeing what they can afford, and that's what we're getting for this year. So these are our new numbers. This slide was from last year, but I still feel like I'm there. I see that shark as a $22 billion deficit that's coming our way, right? So
Off the plane.
yes, I really like.
And what you don't see is I'm sitting on the other edge of that out of the screen trying to hold the board for it.
Yeah.
It's rocking.
Yeah.
Trying to stay there on this thing.
Trying, but
I think Joy's back there too, trying to help everybody stay afloat. This slide has continually popped up, in the past probably 2 years. I've been presenting on what's happening with Prop 30, Prop 55. These were tax initiatives that support education. Because they do have an expiration date, CTA, the teachers union is working, to make this a permanent voter approved tax. And so, they'll need signatures by May 4th, 2026 to qualify for the November 2026 ballot. So they're working on that piece to try to ensure that we have some permanent, taxes and that we're not worried about it having to expire. And have to deal with that in addition to what's happening with the state. The other one is, the Service Employee International Union, so that's that second half where it's talking about California Billionaire Tax Act. And that's a one-time tax imposed on, I think they have to have over 1 billion of covered assets in order for them to have to pay into this. And so that's projected to raise tens of billions of dollars in revenue. But again, this is just an initiative. They'll need signatures by June 24th, 2026 to even qualify for the November 2026 ballot. I'm going to talk a little bit about programs. There wasn't a whole lot of changes. I either picked programs that are still relatively new, big programs, or things that are coming that did have changes. For the universal TK, there was not a whole lot of changes. The implementation was in full implementation last year. And so this is just kind of a repeat, nothing new necessarily in that, just, you know, the new TK add-on number changed. Other than that, everything is pretty status quo. Example of expanded learning opportunity program. That's one of our biggest programs that we have. And that's just based on a flat rate. We are at the highest rate based on our unduplicated pupils. And this year, we were allowed to now start using ELOP for attendance recovery. So that's the only change that we've seen in that program. In the Learning Recovery Emergency Block Grant, that was a block grant that the governor swept away because they needed the funds. This happened back in 23-24 when they were having issues. They told us they were going to pay us that money back. We're like, yeah, we're probably not going to see those funds, but lo and behold, they paid us the first year, this current year, 25-26. And because their revenues are doing so well, they're going to pay us the remaining 2/3 in this coming up year, or so they say. So,
Yeah, now.
so we're hoping that we see, so for the next 26-27 year, they're saying they're going to give us the remaining funds for that. Another initiative that the governor is proposing is an additional 1 billion of new ongoing funds for the community schools. So that's been one of his projects in terms of trying to get this momentum going. Universal meals continues. I left this slide on there. There's not a lot of changes, but because we are funded federally, we have not seen any changes in terms of the universal meal, so that's good news. And then there was 2 new programs: implementation of student reading difficult screening. There's going to be a 40 million one-time allocation, and then college and career pathways, including dual enrollment. That's another 100 million one time. So those are just the kind of the programs that are all one time, but like community schools is continuing potentially if it passes, and same with dual enrollment, college and career, and then new reading difficulties. So there has been a lot of money in literacy, and so we're seeing a little bit more of those funds this year for next year. They focused a lot of time in special education. I include this slide because I feel like this really is impacting us also.
Yeah,
And so the yellow is our total enrollment. Our blue is students with disabilities ages 0 to 22. And then the green is the percentage of students with disabilities. So statewide, we're seeing that trend go up. As you can see, in the state of California, the enrollment is kind of trending down. But the amount of students with identified as students with disabilities is increasing. They did increase our base to 999, which is good. And then the COLA applies to this funding. But we are having to see this, we're seeing this in our special education department. More students being identified, and of course that comes with services that need to be rendered. And then lastly, I'm just gonna talk about the risks that we're seeing and that I'm paying attention to in terms of this coming up year and the future years. Is that we have a projected deficit of 22 billion in 27-28, and shortfalls fall totaling 45 billion in the 28-29 year, 29-30 year. And so those are things that are gonna keep me up at night coming next year. We continue to see declining enrollment across the state. We're starting to now see it at our schools, and so I'll kind of go over some of those numbers. Stock market volatility, overly reliant on AI companies' performance, and so once we see that crash, our revenue is going to slow, right? Federal policy uncertainty related to immigration and foreign policy, inflation volatility and federal response, medical costs, and caseload pressures. And then, of course, the new settle-up methodology, state reliance on Proposition 98 borrowing is concerning. A deficit for 27-28 is 22 billion. Before I go over all multi-year enrollment projections, I kind of want to give you some of the assumptions that come into play when looking at our MYPs. And so on the right-hand side, I've just added things that are not on the PowerPoint from school services, but this gives us our California, our consumer price index, our COLA, minimum wage, where our CalSTRS and PERS are certificated and classified step increases, etc. So that's what the assumption numbers or factors that I use for our multi-year.
Is there anything about teachers going on strike in our district?
Not that I've heard, but I'll let.
So, yes, that will come later on in our legislative update, so we'll share more about that.
All right, so I'm gonna go over the seat-based schools, as those are pretty stagnant and kind of either growing or kind of staying flat. So our CBITS numbers for 25-26 was 1,894 for our COA campuses. And so you can see the trend. We did have a dip back in 21-22, but for the most part, we have increased trajectory at that school site. A lot of it has to do with expansion we did with Dudley C. So all good things. Here's their attendance rates for 25-26. Attendance percentage to enrollment was 93.86. They've kind of ranged between 93 and 96. Obviously, we would love to see that higher, because that means more dollars for those school sites in order to serve students and provide services. Here's their MYPs. As you can see, there's already a deficit spending on your unrestricted side, and that really has to do with facility projects that they're doing. They have a really big project at Dudley C, renovating all the playground and outside areas for students to be able to use. And at the elementary site, we also had a playground that's being installed due to the amount of students that are now at that campus. They need more room. And so that's what that 725, these, the MYPs, I also want to point out, these are from first interim, so we're currently working on second interim. You won't get that until March, and so these are first interim multi-year projections. But because we've had changes to our independent study schools, I've created that additional chart that has the pink and yellow. That's to show our difference between first interim and second interim. I have the LCFF numbers for that already because we're working on it. And so that shows if there's an increase or decrease from first interim and how we're starting to address that. You had a question?
John, one quick question. Do they have a wait list?
They do.
Yes,
Do you know
Yes.
what the number is?
I don't know exactly, but it's probably around 30 kids between elementary and middle school
One
combined.
classroom then essentially.
Correct,
Okay.
but those are spread out across the 9
Oh,
grade
it's spread out
levels,
across all.
TK
Okay.
through the 10 grade level.
Okay. We have futures enrollment over time. That one has, you see a little bit more of up and downs. We did see a dip at the beginning of the school year. They did address those, the number of student drop, and there was cuts at the beginning of September in order to keep them solvent. Their CBEDS enrollment was 394. We're kind of just being conservative and doing flat enrollment for that school. They did have some mid-year graduates, and so their CBEDS is actually, their enrollment number currently is lower than the 394. Here's their attendance to enrollment percentage. They're in the 93.36%. And they've ranged between the lowest 92 to the highest 97. And so they've kind of like their attendance, it's kind of gone up and down, but they're at 93. Here's our multi-year projection. The 1.3 that you see in the unrestricted budget is a field project that we're working on. We are kind of on a hold stand because we're waiting for Prop 2 and the facility incentive grants results in order to, are we gonna use general fund money? Or are we gonna get any match money? What does that look like? And so that is what that $1.3 million deficit in the unrestricted budget is. The negatives in the restricted side, those are using this is one of the consortium leads for community schools, and so that is using up some of those restricted dollars that have come in for that. Okay. We have HLA's enrollment. That one has also kind of up, it had a little bit of a dip in the last couple of years, but for the most part, it's pretty flat. Not a whole lot of changes. Their attendance to enrollment is at 93.52%. They're actually doing really well in attendance. As you can see, that's pretty high compared to their historic trend. And so we continue to always educate our administrative team on the importance of attendance. What does that mean? And really seeing what is the difference if you had a couple more points, what does that look like in terms of revenue? So we always emphasize the impact of that, so.
What are we attributing that to?
Yeah, so, and Joy can also share about this, but I really do think it's the new leadership and Dr. Carla Galbraith and Joy have been working very intentionally with education. I think Dr. Galbraith has brought in a set of expectations for families, and so I think the culture has changed at the school site. So Joy, you wanna?
That is true. The culture is definitely shifting because there's more awareness on the family side that being at school is important and being on time. But if you also remember last year, mid-year, we implemented the attendance program across all of our CPA schools, which is an automated mailing system to our families when they're absent, which also involves the sites making personal contact with them. And so they're fully implementing that system this year.
That's
Right,
great.
they had
That's
last
great.
spring semester to kind of get used to it. This year, they're fully implementing that
That's a
system.
great turn.
And then I think the third area would be the work that Joy and Director Dillon are doing with our attendance work and our home visits. So you want to share a little?
Correct,
Yes.
so the Student Services Department under Director Dillon has implemented an attendance monitoring system. So along with the attend database, we are also partnering with our community engagement teams. And so when they are absent, when they receive a phone call, now the community engagement is doing home visits. And so they're partnering with our sites. And this is all part of our very detailed attendance monitoring system we've implemented.
Do we have a good, student council, it's where the parents are involved, is that improved?
I would say it's kind of by site, site by site, we are
Site
seeing
council.
parent engagement, so.
So Dr. Galbraith has shared with me that this year she's at school site council, she's had about 15 to 20 parents.
Nice.
And I think it was well above the expectation that the site had from years past. So she's been pleasantly pleased with the engagement she's had with families from school site council.
I like the new logo for HLA, it's beautiful.
Thank you.
Moving on is our MYP. Again, you see some negatives in the unrestricted and the restricted side of deficit spending for the current years. That is also associated to the field that they have coming in as a shared campus. They share part of that obligation. They actually have restricted dollars to kind of cover, offset some of those costs with the ELOC funding. They have enough carryover that they could pay a portion out of that. So just wanted to show you from first interim to second interim, we're actually seeing an increase due to enrollment, actually about 5 students more. Their attendance obviously is driving some of this. And so you can see that in that number. So if you're just looking at the enrollment from first interim to second interim, and I think this is a very good slide in terms of looking at the attendance, right? We were historically at 91 3-year average. And so now we are at 93 with only one more student. And our UBP is pretty flat. You can see that that's what's driving. It's really the attendance that's driving that 250,000. Our GI Gateway International School has seen an increase in enrollment, and that's due to the new 4 portables that went in. They're wrapping up our TK project that's happening in the corner of that campus. If you haven't gone out there to look at it, last time we were at that campus, we went out, took pictures, and that field is looking beautiful. So make sure you go out there and check it out. Their attendance to enrollment is at 94.99, and as you can tell, they're pretty steady on how well they've been doing with their attendance. That historically has stayed pretty consistent.
Question again, do they have a wait list?
They do have a wait list at every grade level.
How do you know the size?
Again, probably between 30 and 40 kids. It's a little bit
Across the whole,
across the school. Mhm.
And they're at, they still have room to grow, but not the whole lot. So that campus is at capacity. Once we hit that enrollment mark, which is
Capacity will be 710.
710. So once we hit that number, there's no more room.
So we're still transitioning from the church all to the.
Correct. We still have 2 TK at the church. Those classrooms are due to be finished in March, and then those TKs will move over next year.
And then that'll be our bench.
And then we'll be done. Yes.
Okay, so here's their MYP. The deficit of 2.2 million in unrestricted is due to paying off San Juan for them to manage our facility project. After that, they are going to start working on building up the reserves, and so you see that 620 in next year. is to start replenishing some of their reserves for that. Epic enrollment is pretty flat, at 409 currently. And they're currently at the same, I think the last time we checked enrollment, it was 408. Their attendance is at 91.42. So this one's a little bit low compared to prior years. Attendance to enrollment. And here is their multi-year. There is some negatives in the unrestricted budget, and that is to offset some of the costs that we were paying for the TK. 2 classroom remodel downstairs, the new suite. They are slowly expanding at that campus. And so we're supporting him in increasing enrollment at that site. Currently, based on where we're at, due to the ADA to enrollment, again, attendance matters. That's a negative 2.02% in attendance. And UPP went down also, and that decreased to 65,778. This principal is very well versed in his budget and is very, very frugal. He's very careful with all his money, so that was easily able to be cut just from his operating budget. I'm going to start talking about the independent study schools. As you are aware, we've had training with independent study school teachers in order to ensure that they're taking attendance properly. And so you will see some of that reflected in our numbers. And so for our 25-26 year, our CBEDS number was 814, which is higher than what we expected. They continue to grow. Their enrollment, the 6th of February was 892. And so that's a jump of 78 students. This is the one school that we're seeing a huge influx. A lot of it has to do with the new program at Connections. Obviously, Virtual Academy is also a very sought out program. And so we're seeing increases at this campus. Our attendance to enrollment has dropped. As you can see, historically back about 2016 to 2020, you can see that those ranged in about the 80% attendance to enrollment. Then we see a little bit of an increase. And now after this training, after clarification questions, we are at 84.05. So that's a huge decrease in terms of first interim and second interim. And so that's why I included those additional snippets of where I'm seeing first interim and second interim, just so you have a little bit of an intake of what we're going to see at second interim. So here's their MYP. They were balanced at first interim. Once we put in the LCFF factors, that's a $1.9 million cut in LCFF. So that is huge, right? We're already mid-year. And so getting these numbers, obviously attendance, we kind of have to wait until it materializes in order for us to get numbers. We've been working with the site to make the necessary cuts. Obviously, if you're cutting staffing, you've already paid. You can't make a full year of cuts with staff. If you're laying off now, you're only going to get half a year of savings. And so we are going to see impacts to our reserves. Right now at this site, we've made cuts of 1.1. Luckily, because we have new programs and we haven't added additional staff, we're able to cut a lot through just their balances in unrestricted, LCAP, EPA. And so they didn't face what our other IS schools that are more established and kind of used to using all these funds are seeing. So this one wasn't as heavily impacted, even though that number looks large. They were able to make more than half of the cuts just from their operating budget. Okay. For Sava Twin Rivers, this is the campus over in Natomas. Our enrollment is at 250. And since, we always see a trajectory up from CBIS, they're up 19 students. Okay. Again, on the attendance numbers, you're seeing those drop. This is even more drastic than CCCS's attendance numbers. And so you can kind of see that they've always ranged. I think the only low number that they had was in 2021. But other than that, they've been up in the 90s, over 100. And the over 100s, that's because they have an influx in of students throughout the year. And so that can trigger your CBITS number to be lower than what your ADA number is, right? And so, but the 73.33, you'll see the impact on the next slide. So you can see this school site, because we had already made cuts at the beginning of the year. And then again, now we're having to make adjustments again. That's an $868,000 impact from first interim to second interim based on those new attendance factors. This school site had some facility items that were being finished up in the current year that rolled in. So that's what that 384,000 in the 25-26 year is. Okay. And again, the bottom is just using up restricted dollars. You're going to see this on all the SAVAs because they have programs that are using up their restricted balances, such as strong workforce, CTIG, CSI, dual enrollment, A3G. They have a lot of categorical programs that are using up, we're using up those beginning balances. Here's our enrollment for Sacramento, Sava Sac City Unified. And we are at 616 of enrollment. That one had a dip at the beginning of the year. Our attendance numbers have dropped to 78.9. And so you'll see the impact of that in our next slide of 1.1 million. They've made cuts about 268 for this year. They pretty much, as we're getting new positions, they're freezing. They're just reducing to the necessary items that they need for the rest of the year, but they're trying to be as frugal as possible. And so that is the impact to that particular set. The 59,103 in the unrestricted budget has to do with capital projects, the intercom systems that they added to their campus for security reasons. And again, for the restricted side of the house, this particular school site has the California community schools dollars in there. And so that's why those numbers look even higher than at other campuses. Here's Elk Grove's enrollment. Elk Grove is at 368 students. Since February 26th, their enrollment was 21 students more, so they're at 389 currently. So those are good news. This campus had the most drastic change in the attendance numbers, and they're at 60.18 versus historical 90%. That impact number is reflected on that slide, 1.9. And so this one is also going to impact all the ISPOs are going to impact the reserves and the amounts that we have. None of them are going to hit the sustainability amount. So we still have at least 15% in each campus, but the over 30% and some of the facility 15% set asides are going to be hit. Gateway's community charter's goal is to maintain at least 30% minimum reserves at all time. Facility acquisition, construction and maintenance is 15%, so we are touching some of that for some of these schools. We are not, though, touching the reserves for sustainability or the economic uncertainty. So 100%, 15% will be left untouched and in those reserves. I will give you more detail at second interim on exactly how much that impacted each of the reserves and where they're at percentage wise. If any site, obviously this is more for the school, the classroom based LEAs. If it's over 30%, then it's put in a facility acquisition, construction, maintenance set aside. I'll entertain questions.
You tired? Great job, great job.
Well, you know, this is, you know, really, I've been around a long time and I keep learning things. So I have to tell you, very, very pleased. This is really very well presented and with the charters, and I know in our discussions ongoing, I have some comments about it, but no, I really thank you. It's a real true snapshot of where we are.
Yeah. Attendance and whatever. Yeah, that's really interesting to see.
Yeah, and our P1 attendance is what drove these factors. P1 attendance was taken over the break. So right after we cut for break in the winter is when that cutoff is. We then get numbers, and then that's how I built my second interim. And so for first interim, we kind of knew what was happening, but we didn't want to just guess on what that number would be. We wanted to see P1 numbers before we could really estimate for P2 or for our second interim budget.
Anyone else? Thank you and your staff
you.
very much. Thank you.
All right, so part two of just kind of the discussion is really going into our budget priority and recommendations, and this will be a much longer kind of detailed conversation. Omira has done a great job of setting the stage of kind of where we are. I'm going to talk a little bit more about our priorities moving forward, and what some of the background to some of our next steps are. When we were trying to figure out who was going to deliver this part of the news, Omira was like, I'll do the rest of the stuff. Jason, you get to do the future part. So I'm happy to share in this. And obviously, as we continue today, you'll see Joy is here also. Laura, our director of HR, is here as we kind of go a little bit through different parts of this. So I really want to just talk what I'm calling what has been our guiding principles for decisions around our budget and the work that we're doing for us. And it's something that I know we kind of get from your thoughts. We want to ensure continuity of our core services. We have had significant academic improvements and progress across our programs. We want to focus first on providing supports for students and especially those who need it the most. As Omira just shared in her outline, special education identification rate actually has increased while funding has stayed flat. We are experiencing that exact same thing in the GCC. Our SPED department continues to grow because our SPED identification rate is growing. Honestly, despite many unknowns, because you're going to hear in this presentation, there is a lot that we still don't know. We don't want to wait to plan. And that's why we felt today was very important to kind of put a flag in the ground and say, we need to talk about these things. And then most importantly, we want to keep our community and our stakeholders informed, not only the board, but we want to keep those outside. So really our budget work group has really been a core group that is coming together. It includes myself, it includes Omira, our assistant Superintendent of Ed Services, and School Leadership, Joy, our Director of HR, and each of our site administrators. So last month, the four of us met together with each principal going through their budget and talking about each of these areas that we're looking at. I stole this from school services, but really, anytime you kind of have this budget realignment, you really have to have these three departments working very closely: business, ed services, and HR. And so we have replicated that to ensure that that's the work that we're doing. So our objectives so far have been to ensure student needs and a student-centered approach. We've been reviewing program needs as well as related staffing levels, and I'm going to share some information here with you in a few about staffing levels. We are looking at how do we fund prioritized positions, and for us, we feel those positions are the ones that are closest to the students. Laura, we want to, our core value is to value people, so we want to make sure that we honor staff with whatever adjustments or changes we make by ensuring timely notices, as well as providing staff with various options that might be available to them, especially as we get to this part of the school year. We want to continue to look at funding our related goods and services and establishing a baseline to build future budgets. And I use this term baseline because with the one-time dollars that we received, our budget baselines kind of got off kilter. And that's not just a GCC problem, that is 100% an education problem. And I'll share that with you. So the work that Elmira and I are doing is we're actually creating a new baseline for our budgeting across the organization. Ultimately, our biggest objective is to ensure organizational sustainability. And that's the work that I feel is at our hands. So let's talk about the budget landscape. I like to say, how did we all get here? And I use the term all because this is not, and I can't overemphasize this discussion that we are having today is one that is being had across every district in the state of California. I had the opportunity recently to be with a group of superintendents from across the state at the SUP Symposium, and they have this thing called top of mind. The number one thing that every superintendent is talking about this month is budget. So we're in good company, but let me tell you how we all got here. Number one is the fiscal cliff. For the last 3.5 years, Elmira and I have been a broken record with our entire staff, with our administrators. I went back and looked at the superintendent's spring presentations just to see how long we've been saying this to our administrators and our staff. For the last 3 years, we have been saying the fiscal cliff is coming. The fiscal cliff is coming. One-time dollars are ending. The fiscal cliff is coming. This year in our administrators summer retreat, I told them the fiscal cliff is not coming. It's here. And I took some heat. Everyone's like, oh, Jason, why are you being so mean and you're tearing people down? I'm like, no, the fiscal cliff, people, is here. And it's something that we have been extremely transparent about in terms of what's happening. And that is the fiscal cliff and the ending of the federal one-time dollars. As a result, there's also the impacts of what I call the hiring surge. Most of those one-time federal dollars came with the you must hire people. When we got all this money for arts and music, you must hire classified staff to do this. It was not, it wasn't we're going to give you the money and you can decide how to put it in. So it forced education to put these dollars into things that eat. And all of us know the number one thing that you don't do with one-time dollars is put it into things that eat, because they eat forever.
Yeah.
Well, these dollars all came with the caveat because, again, it was the federal government's way of ensuring that the unemployment rate was remaining low and we were keeping people employed. The caveat was that you had to hire people. And so education had to do that. At the same time, we saw personnel costs that continued to increase, such as salaries, benefits, our pensions continued. I think our CalPERS for the first time has kind of finally leveled out just a little bit, but for a number of years, CalPERS kept increasing. And then for educational organizations, there was a percent of change for our staffing from pre-COVID 2021 to now, and I'll share a little bit more about that. Health and welfare costs continues to be a factor that we all deal with. I believe the board remembers last year, we looked at a 12% increase in the cost of health and welfare benefits. That's anticipated to be even higher this year. Special education costs, I've already talked about that. And then all of these things, all of these one-time dollars, all of these programs came with more compliance, more reporting. And so we had to staff up to be able to do these things. I like to say that the roller coaster is going into the water. Yeah, you can look at the cartoon, but that really is the state of education finance in California. So I'm going to share a few data slides. These are all just for public purposes. These are all publicly available and are out there. So we are not sharing anything that is not already available and it's being shared widely. I will cite my source, which for these is School Services of California. But they did a very unique thing in that they looked at the percent of change in terms of employees from 2019-20 to 24-25. What you're going to notice as I go through these charts for, in particular, authorizing districts, is in 1920, we all kind of had a very nice tight line. But then as we came out of COVID, the one-time dollars, you start seeing this very volatile where we increase either certificated or classified staff. The blue line that you see on this chart is the enrollment. So while you see that staffing in some cases outpace the enrollment, you'll see kind of the districts that are struggling at this time. So here you see our authorizing, we have 5 schools with the Twin Rivers Unified School District. This is their chart with the teal line being their certificated change in certificated staff, the red line being the change in their classified staff, and the blue line being their enrollment. Elk Grove Unified, we have 1 school with Elk Grove, which is Sacramento Academic Vocational Academy. You'll see a similar line in that enrollment is lower, but their staff has also escalated, or their change in staff has escalated at a higher rate. Sac City Unified, we have 1 school with Sac City Unified. Their percent of change is again very clear that while their enrollment has decreased, they have seen an increase in their classified as well as their certificated staff. And I believe that is some of the challenges that they are experiencing. San Juan Unified. Let me just bring that one of the things that you'll see with the red line for the increase in classified staff is somewhere around 2021, 21, 22. The state gave schools this money called Expanded Learning Opportunity, or ELOP as we call it.
Yeah.
And so what that did was it said, hey, you should give, and every kid should have after school programs.
Right.
So what we did is we all hired classified staff to work our after school programs. And so that's where you'll see San Juan, very interesting. While they started out, San Juan has moved to a model where they use more contractors for their after school programming versus actually having staff. So that's why you see a little bit of a dip with their classified staff. Washington Unified, while we are authorized by Yolo County Office of Education, the county office is a very weird kind of chart to look at because they have a very different staffing model. However, Washington Unified is in West Sacramento where we're located. So I shared those numbers with you. Washington Unified likewise utilizes contractors for their after school program. Thus, you see a decrease in their classified, but they're certificated, continue to grow. So our team quickly brought this down to, I'm sorry, one more school. We have no schools in Natomas, but I did want to use them as an example of a district that has done some course correction, and you can see that now they're kind of bunched. And so they are not experiencing the financial challenges that a lot of districts are, a lot of our neighboring districts are doing. So our team wanted to look at what does this mean for the GCC? So we likewise created a similar chart to look at our percent of change. And as you can see, we likewise have, much like many of our neighbors, we have grown in, and this is GCC, all sites together. We have grown in our classified staff. Most of that's been driven by our ELOP and our after-school programs. Currently, and Joy, you'll have to help me, we have after-school programs at all 5 of our seat-based schools through ELOP, but we also have, I'm sorry, 4, but we, thank you, not the high school, but we also have supplementary programs at even some of our IS schools. So you want to talk about our?
So all of our TK through 8 seat-based schools have an after-school. 3 of them also have a before-school program. So EPIC, HLA, and COA have before and after-school program. GIS only has after-school program. And then other schools don't receive ELOP money, but they are supplementing with after-school programs such as Futures. They have some after-school. CCCS TK8 has some after-school as well. But one of the differences between us and San Juan is that because we have our UPP is more than 75% at our sites, we have to offer and serve all students interested. Whereas San Juan is not required to do that, and they do not offer to all of their students free of charge.
So even with that in mind, you can see here that our staffing has grown or changed more significantly while our enrollment has not changed as much. So some of the discussion that we'll be looking at and we'll be talking as we go deeper is how do we begin to right-size the organization? So I'll go quickly through each of our school sites. This is CCCS, all programs. So while I have a slide for each, I did take one to say this is if you look at CCCS as a whole. Actually, they are really within the range that you would want. Their percent of change has kept intact with their growth in enrollment as a whole. As we dig into each of the various individual schools, there are some areas of work that Joy and myself will be doing with them through their budgeting. But as a system, CCCS has actually kept within pace as a total program. CCCS High School, again, you see their certificated numbers have remained fairly, they've actually gone down a little bit and classified, and by the way, I should say that GCC numbers are static, they're up to date. So some of the changes that you will see reflected is already the work that we've been doing for what I call mid-year course correction. So you'll see there's some dips. It is because we've already started making some of those corrections within our system that O'Mara just shared. So that's why you'll see some declines. Obviously, the enrollment growth for CCCS is mostly our Connections Academy as well as our Virtual Academy. But we are beginning to see a return of growth at our high school and our TK8. Because we did lose some enrollment at our TK8, but that enrollment has begun to return. TK8, again, you'll see that it's a small staff, so that percentage of change is a little skewed in that is not, and I made sure that I included what I call the actual numbers. So you'll see that in 1920, they had 2 classified staff, they've increased that to 9. And so you'll see that there is obviously some course correction that will happen there. Virtual Academy, Again, their classified staff went from 2 to 6, their certificated staff went from 12 to 22. And their enrollment, again, in the very beginning of time, when we first started this program, it was coming right out of distance learning. And so we had a few more students who had not yet plugged back into their school. So we've seen kind of I would say a stabilizing or a flattening of the virtual academy program as we have moved further from the COVID period of time. And then connections, there's no chart here because this is their baseline year, but their enrollment currently is at 247. They have 3 classified staff member, which is for that ratio about 1 per every 82 kids. And they have 13 certificated staff, which is about a 1 to 19 ratio. COA elementary and middle, this is the big group together. But elementary, you will see that last year there was a drop in the classified staff, and that was some of the work that we started early on with them to begin to bring theirs. And so, Joy, you want to talk about the staff that we transitioned there?
Yes, so last spring, Omira and I met with all of our TK8 sites, looking at their enrollment, their staffing that was paid with one-time funding, and looking at the loss of some grants, and realized that that was the time to do some work, right? The preference was to do it then. So we worked with each of the site administrators and really started to weed out any of the fluff in their staffing, and yet keep their program as a priority for what they needed for their charter.
So you'll see that trend along the lines with a number of our seat-based schools. You're going to begin to see the trend with our independent study schools. This is the middle school. Again, you'll begin to see that trend of classified kind of coming down. But again, a lot of that is after school program staff. Epic, Omira just kind of shared that with you in terms of where their enrollment is. Similar situation, they have significant after school program staff that they have begun to look at. They also had some of their paras were doing, how would I say it, Laura? They were doing some core instructional work that we transitioned those to be the certificated teachers. So that's why at Epic you see an increase in certificated teachers, a decrease in the classified staff. And a lot of that was to be compliant with credentialing requirements. And so again, nothing that the school has done, but it's just having the appropriate credential for the teachers. Futures High School, we actually started this work at the beginning of the school year because of their loss of enrollment. We started course correcting them early on. And so this year, and I believe Omira, September, we made a number of those adjustments already at Futures. But for a school that does not have an after school program, we are looking very closely at their growth in their classified staff, as well as ensuring that their teaching ratios are correct. We know, or we're aware right now that some of those classes are fairly small. So those are areas that we are looking at for this course correction. Higher Learning Academy, again, we saw a significant growth in their classified. That has a lot to do with their after school programs. Again, they have they remained fairly flat with their certificated staff. And so that shows a little bit of stability there, as well as we are seeing growth in terms of their enrollment. But again, we continue to look at the number of classified staff to ensure that we are appropriately using them in all the places. And again, when you have one-time dollars, you just add another body. We're now going to say, are those bodies making an impact on the instructional needs of our students? GIS, we already started a little bit of this course correction. Yes, they have after school programs, but because of their construction project, so Assistant Superintendent, you want to talk about some of the things we already started here?
So yes, we did transition some positions that were being supported by paraeducators and not. It was world languages, PE, art, and music. And so we transitioned them to certificated teachers so that we could use the arts and music block grant. But we do need to continue to look at their classified staff and right size them a bit more.
So our independent study schools, as Omira shared with you, as we really work hard to ensure that we are appropriately monitoring and tracking our attendance and our ADA and following all the rules and changes that came down as a result of some of the new legislation around non-classroom based schools. We are seeing a little bit of a course correction at our non-classroom based schools. The change that you see is already the work that we're beginning to do. But again, the percent of change in terms of classified, our certificate has seemed to keep in, in step with enrollment, but our classified was a little bit inflated. We're beginning to bring that back into a course correction. So what you see here at Twin Rivers, our SABA TRUSD is a course correction of bringing them back in sync. Saba Sac City, same thing. This is reflecting some of the changes that we are already in the current time making to bring that site back into alignment. And then Elk Grove, still a bit more work to do there as we continue to work with that administrator. So here are some immediate steps that we have started to take in what I call the current fiscal year. We are looking and have begun to talk with our administrators about really what we're calling a hiring realignment for all positions, really saying, are these positions serving multiple parts? As we look at our paras, are they paras who are working just in a very narrow space, or are they working across multiple areas of the school? And so we're looking at that, and as we have said, there's very limited exceptions to, who gets cut out of that. We're looking at every area. All travel and conference and attendance is really being reviewed on a case-by-case basis. One of the things that happens when you have one-time dollars is people get used to going to conferences. And so we are working very hard to say, is that necessary? Do we need to send, a team of 50, 60, 70, or do we need to only have 2 people go, bring the information back and train the trainer? So that's some of the work that we're doing. Obviously, we're reviewing and having a tight limitation on our overtime, as well as additional stipends that we provide. And then we are looking at all of our facilities related expenditures across each of our schools. With that being said, I'm going to move to the next part unless you have questions about this first part for myself and the team.
Questions?
I just want to say, I really appreciate the graphics. It's very visual, and it almost is something I think we should do on an annual basis to visualize the staffing pattern. I truly appreciate that, and it correlates. And great when you came up with it, because you take attendance and you look at it historically, and then you also look at staffing patterns historically, and then your explanation on the one-time money or the ELOP money. And I think that kind of makes you look at this and really get a feel for where we are for each of the charters. So I appreciate that. Thank you.
Thank you. And that is, Director Turner, that is something that we will continue, because I think it was an eye opener for us just to see staffing levels compared to enrollment. So it is something that we will continue. Yes, sir.
I probably should know the answer to this question, but Did we, because we didn't wanna hire, what I would call permanent staff, did we outsource some of these to outside agencies to manage some of these programs that we did?
So, and Joy can kind of help me on this a little bit. Some of it we could outsource, but the other we did have to hire.
So it's
That's good,
required.
yeah.
We
It was
didn't have that.
required to hire staff, so, I'll give you one example, our arts and music block grant, I think, Omira, remind me, Prop 28?
Yeah.
Prop 28 said you must hire classified paraeducators to provide these services.
Yeah.
Now, what we were very clear about is, we've been very clear to say, this is a grant funded position, this is a position that's one-time funded. However, as always, when you get to this moment, it's
They forget that it said it was a one-time position, yeah.
so we have been very, you know, where we could use contractors, we use contractors, where we couldn't, we just had to staff. All right. Yes,
So we have,
We did, and then we kept getting on, and what's the name of that?
Capturing Kids Heart, we actually have been, if you've looked over the last few years, we've been continuing to decrease them. And I think we are probably at a place where, and Joy can help me with this, where we're at base. Just to be able to, we reduce the number of trainings that we're doing, and again, some of that is because most of our staff have now been trained. But if we have new staff members, we will bring that up, but we are looking at that this year, moving forward.
Yeah, I will only say, I've been advocating that we really look at that year in and year out. I will agree with you, Jason, we've reached a level where I think it is good public relations for us to have that program so that we can tell the parents that we have, you know, the program, and that we can also get the whatever advertising they do on schools that have been rated high on catching kids' hearts, and I certainly keep looking at it,
Yes.
but I think we're at a point where it's a maintenance level. At least that's my opinion.
Yes, and I think that's something that we have kind of looked at for this year, future contracts is, what do we need, what do we need to keep that just?
I will agree, though, I think we need maybe to look at some others. I don't know what we have left. We had a whole number of them, and I can't remember all of them.
A majority of those, actually, we have moved away from.
yes.
Just in terms of creating our own internal departments. But again, those departments were built on one-time dollars, so some of that we'll be looking at as we move forward. Okay. So I want to just briefly, for a few quick minutes before we break for lunch, is to move to our legislative update and where we are on the legislative cycle. So some of this Omira has already shared with you, as well as our wonderful Wells Fargo team, but I did want to bring a few of our political headwinds and tailwinds. Obviously, we know that there's a weakening of the economy. We know that there is persistent inflation, but also I think we've moved to a space and a place of having a lack of timely economic data. And so that is making it very hard for us on a more global standpoint to be able to plan and kind of know what's coming ahead in a number of areas. However, the tailwinds is the economy is forecasted to be above trend. Obviously, we've talked about the AI, I think they call it the bubble, that everyone's watching. And then the consumer resiliency really is very high. For us, obviously, the uncertainty is around tariffs, trade policy, and the longevity of the economic AI stimulus that's really driving right now the market. Some risks to our California state budget, and these are areas that Omira and I are watching very closely. She's already talked to you about the projected deficit of 22 billion and 27-28, and the shortfalls of 45 and 28-29. And so while the current year feels rosy and looks really good, the out years are the future years. I believe will become, to use the term from president of think that will become the new governor's opportunity. And so we'll say it that way. And obviously the stock market volatility over AI, inflation volatility, and the Fed's response. And then for us, particularly in California, is the Medi-Cal cost and caseload pressures. As the state takes on more of those federal health care, what is going to then be changed in the state for us? Community schools is something that obviously we are very involved in, and we're very carefully watching that funding and what's happening. The little information that's coming out is the trailer bill language will provide additional details regarding eligibility, allowable uses, and associated requirements. For us, that's an area that we're watching extremely closely because the state gave these dollars with very little information about how you can use it and what's eligible and what's associated. In the trailer bill, they're tightening that language up. And so because we have significant programs and staff within that, we're watching this very closely to ensure that we continue. One of the exciting things is this is a hallmark program of Governor Newsom, and he desires to keep this going. It will remain to see what happens with the new administration. So at best, we are looking at this being something that we're in the long haul for this current grant, but it is our hope that it becomes more permanent. Charter schools, there is a lot in the trailer bill about charter school accountability. Just to kind of catch up, in 2025, there was some legislative attempts to improve oversight, auditing, and funding systems for non-classroom based charter schools. There were a couple of bills that were introduced. One was SB 414 and the other one was AB 84. But really it came down to this. The governor vetoed SB 414, which was introduced by a local Senator Ashby. But his message said that he wants to ensure that public funds are utilized and addresses fraud and malfeasance, improves accountability and oversight, and acknowledges our fiscal reality to allow for successful implementation. As such, the governor and his solution has introduced a lot of that language into the trailer bill. So we are watching very closely to see what that means, but there will be a number of new accounting and fiscal systems and programs that will be in this year's trailer bill. So we're watching that closely, and we'll be sure to share that with the board. The governor also proposed to extend the verified data. And so Joy, you want to share what verified data is and why that's important for us?
So when you're renewed as a charter, of course, they look at your California school dashboard data, state data. But they also allow you to use local data when submitting for your charter. And for us, that is our iReady testing that we do. And so we test every student who comes to us in the fall. Some schools test them mid-year, and then we test all kids again in the spring. And that percent of change, you see these results at the end of year presentations from the schools. That's what we use as our locally verified data. And our data shows good results. Our students are making progress from when they come to us to when they leave us. So we like that this will be extended for us, right? Because sometimes the dashboard does not always reflect the progress with our students. Locally verified data helps reflect the progress they made while with us. Right here.
So for us, it really is a big thing, especially because of the population that we serve. We want to be able to tell our data story a little bit better. So in the budget trailer bill, it's proposed that this would extend to June 30th, 2028. Currently, it expired January 1st. And then, I believe that Governor Newsom really has built himself on creating his legacy around public education. And we're talking about from pre-K for all, TK for all, ELOP, universal meals, special education, community schools, focus on early literacy, education has been his platform. And I think that as he continues, whatever his next step may be, I'll say it that way, I think education will be at the forefront. And so therefore, a successful California education system this year looks good. I'll say it that way. So here are some key players that are currently shaping our education budget. Obviously, the State Superintendent of Public Instruction, Mr. Thurman, who is currently running for governor, who I think will be touting his strong track record on educational success. And he's beginning to launch a few initiatives, one in particular being the third grade literacy gap and the work there. We have the chair of the Assembly Education Committee, who was also the author of AB 84, who is running for SPI. And so his goal will be to work with those who really can be supportive of what he desires to do. And Assembly Member Martucci was also a school board member. So he comes from kind of that cut of the education world, as well as there's a number of other individuals that are running. The statewide education and governance reform. So some of you may have heard the governor during his state of the state address to kind of just share that he has a different vision for what California's education and governance could look like. But his proposal would be to, in some ways, change the role of the state board and the governor's office and the SPI. And so I'll just say this, more information to come on this, as I think there is quite a bit of conversation around it. Yeah.
Well, I've lost track in the number of times that they've attempted to eliminate the state superintendent of public education. It's interesting that they're now looking to keep the position as a, not to be hard to describe, but to keep the position as a figurehead of I don't know, troubleshooting something, I don't know, but something like that, but it will be interesting, but the point I want to make on this, the state unions have not taken a position on this yet. Yeah. And that will be very interesting to see how this comes down, because that has been a position that they've been able to have significant influence. And and your comment is well made. We don't know.
We don't know. Yeah. So stay tuned. What do you say, Mark? Highlight at 11. So film at 11. There we go. Stay tuned. Film at 11. All right. And then again, some key players that are shaping California's education budget. We have the new Senate President Pro Tem, Monique Limon, who actually was also a school board member in Santa Barbara Unified School District. She is now the head of our state Senate. We have Senator John Laird, who he's moving on from his role as the chair of the budget subcommittee on education, but he is moving to be the chair of the full budget and fiscal committee. And so
he served as a board member on the Career College Board. And,
that's good to know.
Yes.
Maybe. Okay. Film at 11. We'll talk about that. But really, he has been an education advocate. So that's really the punchline there. He has been someone that has been a huge advocate for education. 2026 midterm election, gubernatorial candidates. That's everyone that is currently, and I should not say that's not everyone. Last week, we did receive a new entrance into the candidate pool, which I believe is the mayor of San Jose. Yeah. So we continue to see quite a bit of movement. I will tell you, this is a very interesting cycle in that we're at this point, you have a clear kind of one or two or three, but I think the field is still very undecided. So let me close out with this. There are some federal actions and implications for public education, particularly in California. President Trump continues to pursue his campaign and a promise to close the U.S. Department of Education. That includes following a spring 2025 executive order directing the secretary to take all necessary steps to facilitate the closure. In education, we receive quite often, dear colleagues, letters that come from the Fed that just kind of said, here's kind of what's happening. We continue to see shifting TK through 12 oversight functions to other departments. And so one of those departments that has begun to take on quite a bit of the education items is the Department of Labor. So again, not necessarily closing on paper officially the Department of Education, but moving one of the big parts, which is the Office of Elementary and Secondary Education, to the U.S. Department of Labor. So we are again being very aware of what's happening there. Federal actions in terms of what California continues to do. California has sued the federal government 52 times in 2025. And really it's around these things: freezing billions in education grants, canceling mental health grants, terminating extra time to use COVID-19, and firing half of the U.S. Department of Ed staff. And so again, these are ongoing items that with that being said, that is our legislative update. We would like to, before we move from legislation to talk about a legislator, we had, and I'll ask our board president to join me on this. We had California State Assembly member Josh Hoover to recognize one of our staff members. And so I'm gonna ask our board president if she will
And
talk.
this was supposed to have been a surprise, but I hear that somehow the word got out to the person that is being recognized. So I won't belabor the issue. Ms. Takui, will you come forward, please? We do have an assembly legislative file for Ms. Joy Takui, which was presented to her at the parent summit last week, yeah, I keep forgetting the date. And she was busy at another event, so it was not presented to her personally, but someone said, oh, congratulations to you on your recognition. What recognition? So we're here to recognize her today. Certificate of recognition. Assemblyman Josh Hoover recognizes Joy Takoi in recognition of exemplary leadership in K-12 education and a deep commitment to serving diverse communities with special recognition for outstanding educational services to immigrants and refugee students. Your leadership has strengthened education access, equity, and opportunity for students and families. Presented February the 5th, 2026. Josh Hoover, Assemblyman 7th District. So we are so proud to present this to you for your work. And thank you so much for what you do for GCC Charter Program and for parents and students. We thank you so much. Congratulations.
It's a pleasure to be able to be honored for serving students mentioned here, our immigrant, refugee, our at-risk students, and to do it with such an amazing organization for 22 years.
I agree.
Thank you for the heart that you have for these students. Thank you.
Thank
We're
you.
gonna turn here and take a picture.
Sorry.
Thank you.
Congratulations.
Thank you,
again. Thank you.
Thank you, Joy. And again, the assembly member had the opportunity to say that, but I definitely want to publicly share my appreciation for you, your leadership, and really the work that you do to ensure that we are staying a strong organization in education. So thank you for your leadership. All right. So, Madam President, I
Yes,
believe you're going to say what we're doing next.
And that is, we're getting ready to go into closed session. Anticipated litigation, government code, section 54956.9. And our areas are conference regarding real estate negotiations pursuant to government code 54956.8. Employee personnel matter pursuant to government code section 54957, and I just did the other one. Anticipated litigation, government code section 54956.9. These are the areas that we are going into closed session on, and we will come back later for our consent agenda items, whatever. So, with that, we will break for closed session.
Yeah, I can see what you have in mind. So the next door to what base? We look people one from here. You know where you park outside? The old courthouse office in the back. And then
Hold on.
there's the one.
Oh my.
I'm reporting on our closed session, and the actions that were taken. The first one, the superintendent's staff provided the board a detailed update on real estate negotiations and authorized the superintendent and staff by the following vote: 4 yeses, 1 abstention, to enter into negotiations for the purchase of the following parcels in Sacramento County. And the numbers are 215, 380, 000, and that's what we're negotiating on. The second, 02 and 03. The second item, the superintendent staff provided the board with an update regarding personnel matters for the following classifications: executive management, certificated management, classified management, certificated staff, and classified staff. The third item, closed session, was the board received information regarding anticipated litigation, 1 case, and directed the superintendent to work with legal counsel to resolve the case. And those were the items that we discussed and actions for closed session today. And now, board members, we are ready to move into consent agenda items. And we have 8 items. Adoption of GC board meeting minutes of 1/13/26. Approved personnel consent agenda. Approved purchases over 30,000. Approved disposal in surplus technology. Approved board policy update, which was a new policy. Approved travel reimbursement for DM rates, and you got those rates that were asked for approval. And approved school field trips, CCS high school Camp Ross rallies, field trip April the 22nd and 24th, 2026 overnight. And the last item, approved withdrawal of community collaborative charter school, CCCCS material revision. These are the consent agenda items and waiting for
Move approval.
move approval. Second, any other discussions, questions on the consent agenda items? Hearing none, seeing none, roll call. Mark Anderson,
Yes.
Harry Blanc,
Yes.
Bruce Mandrick,
Yes.
Jack Turner,
Yes.
Lily Campbell. The consent agenda items have been approved unanimously. We have one other item under central administration. Approved 2025-2026 comprehensive schools safety plan. You received information on that in your information on the board agenda. And now I am waiting for a motion.
Move approval.
Move approval, thank you.
Second.
A second. Now I'll ask, do you have any discussion, questions, or anything you'd like to have answered on that item? Hearing none. Mark Anderson,
Yes.
Harry Blanc,
Yes.
Bruce Mandrick,
Yes.
Jack Turner,
Yes.
Lily Campbell, yes. So the item on comprehensive school safety plan has been approved unanimously. All right. That moves us down to board comments. Board, yes, Mr. Rock.
I'd just like to say that I've been going to a couple of basketball games from Future High School. I seen a little boy out there, he's pretty good.
Okay, say one of the boys, do we know who that?
I think he's somebody that was sitting in the room, so.
Well, just a point, Futures High School varsity boys basketball, they're in 3rd place and hopefully they're marching on to the playoffs and tonight is senior night, so.
Oh, wow,
We'll be there to cheer on.
okay. Yes,
Lily, I know you'll do this, but I want to thank the staff today and what
Oh, yeah.
they've done. And it's, and the rain has started, so we're getting right.
yeah, the rain definitely has started, so we gotta get out. Anyone more?
No, it's excellent.
Yeah. And Mark and I thought you were gonna talk about the summit, the parent.
You
summit.
can talk about
You talk about it.
You talked about
Yeah.
it? No, it was great. I mean, the student performances were excellent.
Mhm.
I thought, I liked the recognition that was given out to different people, then the community within staff, including Joy's recognition, that was very nice. Again, I liked seeing the, I'm gonna call them vendors, but these are people that you do work with. And, just really a plethora of different areas that they support. And it was a good turnout.
It was a
I
great
thought it was a
turnout,
great
yeah.
turnout, so.
Yeah.
Food was good.
It was good, the food was good, thank you. Yes, and I do want to echo what has been stated here. Thank you all for today. A lot of information, but it served the board well to hear what is on the horizon. And what we're going to be looking at and looking into and hoping everything goes well, we know with the physical implications and whatever. So thank you for this day. Sorry we didn't get a chance to and do all the things we wanted to, but it was good. And the food was delicious. Thank you both today and tomorrow. So with that, I guess I better hurry up and, oh, you got one more?
Yeah, just two things from the board. One, want to thank Melissa DeMarco, our executive assistant, for really her work with all the logistics and coordination and doing
Yes.
everything. So just a huge appreciation to Melissa as well as to Sarah, who's been in and out helping her today. The other thing I want to recognize the board. Last month, January, was School Board Appreciation Month, and so staff wanted to just give you a little thank you and treat to say thank you for all that you do. You truly are a piece of the puzzle that helps us. Yeah, I got a little cake, but you also have a puzzle piece to remind you that you truly are a piece of the puzzle for us. And then finally, I want to thank my team, Joy, Omira, and Laura, because truly this has been a collaborative work with the four of us to bring this information to you today. So thank you.
And I want to thank you for my birthday card, everyone, which is Saturday, and
Hey, your birthday is Saturday?
the birthday is Saturday. My Valentine's baby. So with that, and I know you're ready to go, I will, the next board meeting,
Our next board meeting is going to be March 10th at 4:45 at our GCC central office.
right? And so now I will ask for a motion for adjournment. So move, I have a second. Second, all in favor? Yes.